Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. All in studio today. Joining me is our senior economist, Tracy Shuchart.
Good morning, all.
And for the entire week, we have the one and only macro strategist, Craig Shapiro. Good morning, Craig.
Good morning. Thanks for having me.
Great to have you here. Jimmy is out in Italy right now. It's probably cocktail hour for him. Close. Midday. He's
on vacation, so yes.
Yeah, he's got Prosecco right now or something like that. We'll sure hear from him, I'm sure, on X at some point and see how he's doing. But good morning, Chad. First day of the month, September. A couple things to talk about this morning. Some things that are pretty interesting to me when we look at the tape. Initially, when we look at the tape, we got stocks week overnight. S&P down roughly 50. You've got NASDAQ down a little over 200-ish. Russell down over 20. You've got Dow down a couple hundred points. Soft start to the month here in equity indexes, but gold and metals are strong, and that has been a theme each and every month. I've talked about this. Really, gold has started off the month strong, and then they've kind of just gone sideways and tried to grind higher. We'll see if this month's different. Bond market a little bit weak coming into today as we have a strong dollar. And so when we look at it, also crude caught a bit this morning as well. So energy and metals is more of a highlight today. Equities getting a little bit of risk off. But Shai, any news, anything over the weekend that we should be looking at?
Well, we do have Trump speaking at 2 p.m. Everybody's been talking about it, but it was just announced that it should be related to defense, to the Defense Department. So probably not market moving, but we'll find out. We also have Trump this weekend weighs declaring a national housing emergency, Besant says. They're trying to figure out what they can do, but they don't want to step into the business of states, counties, and municipal governments. But they're looking to announce something in the fall, which is interesting because they said that there's falling inventory, which is actually not true. We have rising inventory, but we'll see.
But that's okay.
We'll see what becomes of that. Obviously, we talked a little bit about gold. So we've got gold at 35.61, a new high on U.S. rate cut bets. Which is interesting because we also do have a stronger dollar this morning. And again, it's not a one-to-one correlation, but metals across the board, as you mentioned, are very strong. Platinum, silver, palladium, everything except for copper, which is down slightly. And then there is, I thought was interesting, there's like a little known U.S. transport gauge that's flashing an early hint at a slowdown. And what it is it's a chart called negative freight inversion, which just means that capacity is now expanding faster than transportation prices. Although it's very mild, it's something worth keeping an eye on. Now, it could be that because we had front running of tariffs, a lot of people ordered early, but something to keep an eye on, I thought, was an interesting gauge.
You didn't mention WLFI token.
I'm sorry, and Trump Corporation announced a new token, which Deli seems to be very fond of this morning.
I might have bought some. We'll talk about it. Yeah, so a couple things to discuss further throughout the morning. But, Craig, what caught your eye over the weekend coming in the first day of the month?
Well, I was just looking at this. I didn't realize this. Because we were off yesterday, Treasury is issuing 290 billion bills today. Like, just think about that. There's 4 different bill auctions today, 13-week, 26-week, 52-week, and a 6-week. It's a staggering amount of bills. It'll be fine. They'll all be received, no issues. But it's just a reminder how much paper Treasury is issuing between now and the end of the quarter and between now and the end of the year because of the debt ceiling earlier this year, which capped the amount of issuance that we did. So Treasury now is restocking its Treasury General account, which is its checking account, up to $850 billion. And so that's a pull of reserves. That's a pull of investor capital out of other assets to basically restock the government's checking account. So I thought that was a massive number. It's back to school, back to markets. Labor Day weekend is over. And so people now have to get there. Investment committees are meeting today, tomorrow, all week. What happened this summer? Where we go from here? big data week this week, right? We have payrolls on Friday, a lot of labor data this week, PMIs today, services PMI on Thursday. So the market will get a sense of, is this economy slowing into this Fed rate cut, or is the economy fine, PMIs reaccelerating into this rate cut? And I think that'll have big implications on how we'll trade over the next couple of weeks. Are we in more of a inflationary environment or really more of a growth slowdown environment?
I mean, let's talk about leading into a rate cut. I mean, are we going to get one, guys? I mean, is that going to happen? I don't know what the latest CME FedWatch tool says here.
Yeah, I mean, I think that we are. I think it's already priced in the markets. I don't really foresee anything that could possibly happen between, we had core PCE came in last week in line with expectations, a little bit higher than the Fed wants. Now, we do need to watch. We have ADP on Thursday and non-farm on Friday. Obviously, we're going to be watching that very closely because Powell had stressed that he is looking at the labor market kind of over inflation. So we'll need to see what happens with that. I don't see that we have much weakness in the labor market yet, even though we're starting to see a little bit. I don't think these numbers are going to be way out of control or anything. But so I think he's kind of locked into a rate cut. I think because he's mentioned it during Jackson Hole.
Yep.
Yeah, I think that the Powell speech was interesting. I mean, I think people were leaning one direction for him to come out a little bit more hawkish, maybe a little bit push back against the administration, maybe hold on to the Fed credibility argument because so much data was coming up. He still was ahead of payrolls. He still is ahead of another CPI print, which is expected to be hot. So the fact that he leaned into the rate cutting and moved the odds from low 70% to let's say call it above 90%, I think really is locking us in here. It's going to take an incredibly strong payroll number with the new BLS head of data. Probably not going to happen. I don't suspect that that's going to happen. And it would take and then they'll get the CPI right ahead of the meeting. Maybe a staggeringly hot CPI, but he set it up, and so he's kind of locked in, right? He doesn't like to disappoint the market. So with rate cut odds this high, it's going to be very hard for the market to price out that environment. And so if the data is strong and we get inflation that is warm, the market's going to be like, okay, we're cutting into a reaccelerating economy here. That's going to have major implications for the dollar, for gold, for commodities. As we kind of move through the rest of the third quarter. That's
why I pull up the bond market. You got the 30-year sitting on the lowest it's been in the last pretty much the entire month. We're at August lows. They took out August lows, I believe, when I'm looking at it here on the daily. And so now you have strong dollar. Again, we're getting into a rate cut situation here, and the bond market starts heading lower, which, if you don't know, everyone, it means rates on the long end are going up.
Yeah.
Exactly.
This is the same thing that happened last time, right? Remember how much the 10-year broke right after the rate cut? And now you're seeing it in the 30. I didn't look at the 10s just quite yet this morning, but they're down as well, 10, 12, 13 ticks. They're not quite to the August low. So that's what happened. So the front end of the curve is still, I wouldn't say bid, but it's not weak.
Yep.
But the long end, again, is weak. And this is the real concern, right, guys?
Well, exactly. And typically, the long bond and ultra long bonds perform poorly during September, usually around, they're down around 2%, which means yields are higher. So we'll keep an eye on that as well.
Well, you also have these international long end of the bond markets are getting destroyed. I think 30-year JGB yields are moving to multi-decade highs. 30-year Bund yields and OAT yields in France, UK gilt yields, all moving higher.
Talk about that and why that's significant right now.
Yeah, I think what you have is these foreign bond markets are soft as look, the Trump administration clearly is advocating more of an America first policy with respect to defense spending, with respect to other countries kind of paying their fair share, and so you're seeing budget deficits for these other economies are moving out and growing, and they're also struggling with their own inflationary environments, and so with JGB yields are 3.2%, well below where 30-year yields are in the U.S., same with Bund yields. And so we're kind of getting this gradual shift higher in the global long end, which is pulling capital out of the American long end. And so it's a little bit of back and forth. But for the most part, global deficits are rising. Inflation out in the long end is going to be an issue as we are reshoring manufacturing here, building out supply chains globally. And so there's a lot of pressure on government spending. And I think the bond market is waking up to that reality. Global governments are waking up to that reality.
And let's go over to gold now. I mean, does that feed into this gold story, everybody, right? Like now you have, hearing that from Craig, gold, again, bid first day of the month. As I've said, gold has not really done much over the last several months. Obviously now it's breaking out of that range it's been in. And that original high was set, in April? And now you've had a couple of sessions, daily closes above that whole body of consolidation, and now you're in an upward moving market. You're higher. What do you call it? I have the Bollinger Bands opening up, and we're getting near where I would think 3630-ish is where I think we're probably headed. Which is, again, we're in this area now. When you look at the gold market, where you had this, it's the strongest market for the year. I don't know what it is year to date. If you looked at all the major futures markets, gold, I would assume, is probably the leader in terms of percentage wise, but nonetheless, it's been the primary trend has been up. And now you had this long consolidation going into the end of the year, right? We start getting into the fourth quarter. You got bond yields starting to spike on the long end across. You talk about globally in this situation here. Is gold still the play? I mean, first day of the month flows always matter to me. And I come out and I look and I see above a consolidation making new all-time highs. Like, where does this go?
Yeah, benefiting from so many different little trends that are kind of adding up to a larger story. I mean, this weekend, you also had the Shanghai Corporation or Shanghai Consulate meeting, whatever it was, in China, with Russia's there, India's there, Pakistan's there. The global South is there meeting with Xi in China, and they're talking more about moving away from the dollar in trade. And so, what is the global neutral reserve asset that they're going to move into increasingly away from treasuries into gold? That's part of the story. You have a Fed independent story, Trump continuing to come after various members of the Fed, trying to remove remove Lisa Cook. What'll happen with Powell, after his term is up. And so plenty of momentum there. And we know what Trump wants. He wants much lower yields. And so there's, thoughts about credibility of inflation fighting. That's helping gold. So it's just, a lot of little things are really moving in the direction of gold. I think you're right. I think if it breaks out of that, that April high from post-Liberation Day bid and then sell off, the chart looks great. So
there's no resistance up here.
There's
right?
no silver too. I mean, we finally broke $40. We're at $41.50 right now. So, which is, 40 was that psychological mark. We couldn't, we tried so many times this year to get above it, just never could, and we have.
Well, that's what gets interesting here, because I'm going to shift to energy in a moment, because we've got metals and energy leading the way on a day like today, and we talk about going into cutting, right, interest rates. And I made this case, I don't know, whoever we were talking with a couple of times, I said, aren't we getting a little preemptive here again? And I'm not the macro strategist, you guys are, right? But I look at it like this: crude starting to catch a bid, silver starting to catch a bid. Now, silver is not like gold, where it's a utility metal as well, right? I mean, you might have some in your pocket or you have something in your safe, but it's not really what the world is looking at silver as. And now you're coming into a time where you might start to see some inflation. We've also talked with a lot of the people, the ag people, saying, look, we've been in this weak softs market for a while. That's looking to get big, or starting to get big. We got Carly was talking about that. You got cattle at prices that, continue astronomical. And so it's like, is that basically what the bond market is telling us? Like, you can cut rates here right now. Short end might stay kind of where it is. But talk to me about the risks here, because I get very interested in to see what comes of this rate cut. I mean, like we say, you're probably going to get it. But I think markets are going to get really busy. And I wonder if they're going to be like, well, let's see what happens here.
Yeah. I mean, it really comes down to the strength of this U.S. economy, right? We have this bifurcated economy, this K-shaped economy, folks at the top end, cash-rich companies, homeowners doing incredibly, people with locked-in low-rate mortgages doing incredibly well. And then increasingly, the lower end of this K-shaped economy, low-end consumers, renters, small companies, really struggling. And with AI, momentum continuing, job prospects looking a little bit worse. And so there's that bifurcation. And the question is, how much of this economy strength that we've seen in the third quarter, I think Atlanta Fed GDP estimate is above 3% for the third quarter. How much of that was front running the tariffs? How much of that was just some of the malaise from the reprieve after Liberation Day? So a lot of front running, and then the real economy is slowing. I think we're going to get a lot of data this week that will confirm or deny whether or not the economic momentum broadly in America is deteriorating, or we're fine and we're going to keep going from here. And so my sense is with the labor market is getting worse. I think those revisions we saw last month were sizable. We're going to continue to get that. I think now the administration's probably feels okay about saying that the numbers are weak because it's not my fault. It's the data. So I think we're going to see more of that deterioration in labor data, and I think the Fed's likely to be cutting into that slowdown. So I'm not so concerned that we're going to have this kind of runaway inflation environment, but we're going to have sticky inflation. We're just not going to get back down to 2% inflation. And I don't think, the official target's not been moved, but I think the soft target about the inflation goal has been moved, and the Fed is much more comfortable now easing into a more elevated inflationary environment, which has those implications for the dollar, for gold, for metals, and really for portfolio construction, right? As people think about being overweight tech and maybe underweight value, I think that rotation away from tech into value, into things that have pricing power in a commodity inflationary environment is going to continue. We saw a little bit of that last month. We saw more of that accelerate after the NVIDIA numbers. I think that's likely to continue as we push into the end of the year here with that shift into a hard asset trade.
Yeah, and so are you okay with the Fed cutting? You feel like it's okay because the soft job numbers, you think that this is, something that the Fed does, and, you're okay with it?
Yeah, I mean, I have other issues with the Fed too, but I think with respect to where the economy is right now, I think for sure, I think the commencing this rate cutting cycle makes sense. I think if the Fed, in an ideal world, the Fed would cut rates, would feel comfortable cutting rates 100, 150 basis points if they thought that the asset market wasn't going to blow, wasn't just going to go to the moon and kind of continue this wealth effect issue. I mean, one thing they could do is they could use their balance sheet more aggressively to prevent that. They've decided not to do that. That's the problem. They're focusing on this one tool, the rates tool. And so they have to figure out a way to kind of signal to the market that they don't want to see asset prices continue to move higher, because that makes their inflation fighting goal much more difficult. And we know now with the administration talking about this housing emergency, we could talk further about. It's just, look, what's going to happen is they're going to cut rates, and mortgage rates really aren't going to follow lower. Housing prices are going to stay elevated. And so, really what's the plan there? What's the solution? So yes, as far as the economy is concerned, I think rate cuts do start to make some sense. But if the markets kind of run with it and the dollar really gets hit and asset prices go to the moon, where does that leave us? It leaves us no better place.
Yeah, Shai, I want to hear your thoughts on that as well, and then I want to start talking about oil and just heating oil. Natural gas is down again today, but that's maybe we won't get into that.
It's down, but it's slowly moving up. But it's it's a volatile market as it is. But I agree with Craig here. I think they'll get their toe wet with like a 25 basis points and kind of see how the market reacts to everything. But I don't think they're going to go crazy into the end of the year. So we'll see, but I expect 25 for sure.
Yeah. So one cut, we'll see we're the Fed. Let's do a cut. Let's see how the markets react. It's kind of crazy, but all right. So oil this morning, Shai. Looking at my moving averages again. I don't trade off of moving averages, but we've been in a consolidation. This is what we've seen in the past with crude oil, right? We've had, if you go back to, let's call it middle of June, well, obviously you had that big spike higher. We've come back down. Since then, it's been a consolidation. They tried to go lower. They couldn't. Moving averages get flat. But this is multiple attempts trying to get above, like, my 921 or 821.34 moving averages are starting to see a little bit of bump. First day of the month always holds more significance to me. Metals and energy getting bid. Talk to us about crude.
Yeah, I mean, I think that makes sense. What's really interesting about this market is, as of the last COT data, we haven't been this short WTI. They started adding bullish bets back to Brent, but WTI, we haven't been this short since 2007. So that does leave the possibility if we start getting, a couple dollars higher, that we start seeing kind of a squeeze in the market, because everybody was convinced that the bottom's going to fall out of the market. And we've been talking about this all year. It's a very unloved market.
Very unloved.
Very unloved market. We do have the group of 8. OPEC is meeting September 7th. They have unwound the first tranche of 2.2 million. I expect them to hold. There is another 1.65 million, but I don't think that they will attempt to unwind that until 2026, which was the original plan.
Got it. Any thoughts on oil and what you're seeing in them? Or like we said, finally catching a bid here.
Right. Yeah, look, I think the weakness in oil that we've seen for the last few months, I think is suggestive of an economy that's like not humming, right? It's not as robust. I mean, we just don't have, we don't have that demand acceleration, from a strong consumer or from a wealthy low-end consumer. And so, and with all the excess capacity abroad and OPEC keeping barrels off, it's kept the market loose. But look, I think, as we push through, if the economy is holding it together and OPEC, continues to keep barrels off the market and the dollar weakens because of this Fed cutting cycle, with the positioning that Tracy mentioned, I mean, you are setting up a potential, squeezy-like environment here. Maybe one, God forbid, given where we live, no hurricanes, obviously.
Please.
But we know how weather has an impact in September and October in the oil markets that could really tighten things up here. That would have these ancillary implications, right? Because if oil starts to go, that's been the one part of the inflation story that hasn't connected, right? I mean, I think the Fed and the administration as well have been very fortunate that oil has been kept under wraps, whether that's just oil oversupply or Trump, whatever it is. But if oil starts to get going, that's going to complicate the Fed's cutting agenda. It's going to be very difficult for the Fed to really engage on a protracted cutting cycle if oil starts to really move higher, gasoline's moving higher, and then headline CPI prints are printing mid-3s to 4%. It would be very difficult in that environment. So
yeah, it has ripple effects across the board. I mean, that's what I'm saying. When I see oil and I see silver going up, what does that do to the overall market? We'll see. We haven't talked about equity indexes this morning much. Let's get into there a little bit. I want to start with the small caps. I mean, they caught a bid. Rate cuts are coming. Russell starts to get a little bit of a bid. We've seen this so many times. It's not making all-time highs. It's not moving with the rest of the indexes. I sit here and I look at the Russell and I go, okay, it's kind of make it or break it here, right? Because if the Russell starts to fail from here again, I was looking at the weekly chart. You start taking out last week's low, man. It's just like they every time they try to get any sort of momentum, how many people get bullish? The small craps, and they just can't do it. It's like, what's going on here, guys? Talk to me about what you're seeing in the small caps.
I mean, I've been publicly wrong about my view on small caps for a little bit here. I don't see the economy as robust. I don't see small cap earnings really positively inflecting. I don't see the long end of the bond market rallying where yields are really falling to help financing costs for these companies. And so I've been underweight and, really didn't think that rotation. I thought the rotation out of tech would go into more defensive names, staples, utilities, as people start to get more concerned about a slowing economy. But so far, algos have taken this, and I'm looking right now, Qs versus IWM are basically back to where they were in mid-May. I mean, it's been a decent correction on that relative. From my perspective, I think small caps are going to start to underperform again here, but I think it's more in a beta down type market. So I'm more negative on equities here for the next few weeks as I see the economy slowing and maybe the Fed rate cuts really don't do anything. So I think it's more of a beta down with softness for Qs, but small caps underperforming as well.
Got it. So small caps underperforming. I mean, again, when NASDAQ starts to go down in this market, it kind of just pulls everything lower. I mean, the small caps, you're going to try and see that offset. They better have a really good story pinned to them. You got to be more than technically driven to see small caps rally. They do need that fundamental story. Right. It's the market that actually needs it. Like NASDAQ is going to do NASDAQ things, right? S&P is going to do kind of what the NASDAQ does. All kidding aside, though, when you look at the NASDAQ, it's like, again, this is the market. It's been what the big tech companies are doing is what's leading and driving this market. That being said, again, we're near weekly lows in the NASDAQ. You go back a couple of weeks here, we're pushing near the bottom there. I highlighted earlier on my charts where I start to look at back down to this August low.
Is that better?
This August low to me is really interesting because if we start to take this low out, Because to me, August is always, it doesn't kind of matter, right? I mean, I wasn't here the last couple of weeks. Not that I was traveling. I did do a little travel, but not much. But nonetheless, I always look at August. Where we open August, a lot of times we end August. It's not a significant month throughout the year. We all know that most people are away. But when I look at those lows that were made, because you made a high in August and you made a low in August. Now I look at it and go, if we start to break outside of that, that to me starts to become significant. Not that those lows, like I said, are significant, but it gets to a point where if we start taking out that, I thought that was a decent low early made in August. If that starts to happen, gets interesting. Same with that high. But nonetheless, we're in the middle of kind of, not really the middle, more the bottom part of that range. Let's see where ES is. ES is definitely more in the middle part of the range. And so we'll see. September is going to tell us a lot. We didn't even talk about rollover. We're running out of time here. We didn't talk about rollover and other things, but we'll talk about that because rollover is just kind of beginning. You got bonds, rolling, currencies, all this stuff is coming. So quick preview of our guests coming up next, Shai.
So we have Andrew Koval of Traders Community, which is a macro and technical site. He's also traded FX, bonds, oil, and nat gas at large hedge funds. So we'll get his view on some of the commodity markets as well and the bond market.
Yeah, and chat, well, glad to be back with all of you in chat. I see a lot of the comments and seeing everybody in here. Great to see all of you. Remember, we've got a lot planned for 150,000 subscribers. Don't forget to hit subscribe button. Hit that like button as well. Thank you so much for joining us here this morning. Like I said, Craig is the man. He's going to be with us here in studio all week while Jimmy is gone. Look forward to that 150,000 subscribers. We've been baking a lot of stuff going on in the backdrop. We're kind of keeping some of it a little bit of a secret, but it's going to be a lot of fun things happening at the 150,000 subscriber count. So make sure you hit that and hit that reminder button so you never miss an episode. Craig, we're done with you this morning. Thank you so much for being here. Can't wait to spend the rest of the week here with you.
Thank you.
All right, everyone. Make sure you give Craig a follow on X. We will put that in the chat. All right. Next up, let's talk to our morning guest this morning, Shai. Let's bring him in. Let's keep this party going. Andrew, how are you, Andrew? What's going on?
Nothing too much. Getting into
I'm doing great.
September.
Yeah. So first day of the month, first day of the quarter, or not first day of the quarter. It's first day of the month. Let's not get ahead of ourselves here. Whoa, year's going by quick, but not that quick. So we talked about things we're seeing. Oil's catching a bid. Gold's and silver catching a bid. Equity markets a little bit soft. What are your thoughts coming in first day of the month?
I think we're seeing a flow through that we started to see last month, and it's coming mainly from the disaster that's the European financial markets. So you're seeing the gilt collapse. I think it's a 30-year low or something today. The French 10-year bond collapse. That's affecting our long end. In turn, that's affecting the safe haven flows, which we've seen for a year now, or at least 9 months. With gold hit another record high. Silver, which is more the, I guess, poor man's gold, we used to call it. But that's got more than mass. I think Tracy was saying it's $41 now. So that's getting up to that manic kind of high. So we're seeing all that in the background. As far as the stock markets go, we're still, I think what happened was this market has become all algorithmic to the point where we, for example, got bullish on the stock market and oil, etc., was when it just basically hits the breakout levels and then it goes up again. And you've seen that with the S&P more than anything. The view there, just catching up a little bit with what you guys were discussing earlier, great discussion, by the way. Whereas I think where the smart money's rotating or has rotated out of tech and getting in, and if we go back to oil was the most hated thing forever. And I'm thinking that's changed. Charts tell me that's changed. And you're seeing a lot of insider buying. Down here in Texas and over in Australia, you're seeing the smart money buying the Exxons, etc. We like the drilling companies, believe it or not, they're so beaten down. People like Transocean offshore, Patterson, which is onshore. I think there you take they're so beaten down. Patterson pays the dividends, so you got something, and also is Exxon. And as far as Russia goes, everyone say that's the big thing, peace and all that. I personally, and others kind of in our oil world, don't really think Putin wants to stop the war because his whole economy is based towards it. So there's a kind of brief overview of what I'm thinking.
Excellent. So what I wanted to talk to you about, now that we kind of talk about the big picture, let's talk about, I wanted to talk to you about nat gas a little bit because, we're building out all of this export capacity, and yet we can't seem to catch a bid for this market. So kind of what's going on in the nat gas market?
Yes, well, talking about most hated, I think the biggest problem natural gas has, and it's kind of always had it, is they just don't know how to pull back on production. So they overproduce. And with oil, people go on that oil's low. Not really. Oil in $60 is a good price. We're all conditioned that it has to be $100 because I guess brokers say that. So at $60, the liquids are what's doing the damage because they're going to keep drilling. Forget the natural gas can go to waste, but they're going to keep drilling. And as far as, it's kind of doing what it's always does. It's $2.90, $3, $3.20. People get all excited every time it pops up, so which tells you there's still too many people that are either long, caught on it, rolling, or hopeful. So there's probably some more damage there. My personal view is I don't really trade natural gas until the hurricane season comes into play. It's just not worth the risk, because I think we all remember, it's a while back now, but what tends to happen in natural gas is someone will blow up big from writing too much vol, that sort of thing. And that's so you sit back and wait for something like that. Oil's been a good trader, I think, very predictable. It's kind of been in a $60 to $75 range for a year and a half, maybe, which if you think about it, that's what the oil companies love. That's what politicians love. So I'm not on that end of the world bandwagon sort of thing. So I'm kind of happy the way it's going.
I want to talk about the natural gas trading during, crises, whether it's hurricanes or something else happens to move the market. I think that's a very interesting point, and I actually think this is something that retail traders, although I wouldn't recommend it if you haven't been trading for periods of time, but myself included, I look to trade oil more when there's something going on, whether it's geopolitical, whether it is a hurricane. Obviously, we don't want those things to happen, but when they do happen, that's when I am more inclined to trade them because there's an actual story and driver behind them. And, with short-term retail traders, you have the opportunity to trade micros. So there's that as well. But I want to talk about that for a second because I actually think that is something that a lot of newer traders, as they start to evolve, can start to look at those markets. Because I didn't do that at the beginning of my career, but I remember when Katrina happened, and I saw that. I didn't see that Netflix documentary about it, but I look forward to that because I was trading oil pretty much around the clock when that was happening. And I go back to that was kind of, I would say, the start of when I started to do things like that. And that's carried on for the last, I don't know what's Katrina been, 15 years, probably something like that. So, or maybe longer, probably close to 20. Nonetheless, talk about that more, Andrew, and how you find that as an opportunity.
Very, very good points. First, I'd like to say that every trader, unless you're a total day trading stock, should at least become aware of energy because it's so important, oil, natural gas. You made a very good point too that you should trade the markets that and at a time when you mentioned when there's an event, what an event brings is liquidity. So you need liquidity in particularly natural gas because to get out when you're wrong. I always look at the defensive. What if I'm wrong? How do I get out? If it's not active, there's no options. The futures are very fast. And if you're in a stock, say an EQT or something like that, because you like natural gas, then they're going to lose their liquidity as well. So that's an important thing. In fact, I'd say for anything you're going to trade, you want liquidity. But more so things like this, because things like natural gas, so we just see what's on the electronic market, but the market is so much bigger off, in paper, off the market, for, options, etc., physical. So if there's a big order coming through there and there isn't liquidity, you can think you're right, but you're not going to be able to get out. And on hurricanes, there's the misbelief that if there's a hurricane, natural gas only goes up. Well, what it does cause is demand destruction too. So it depends where it is. So hurricanes, more than not, are a big bearish event. If we go back to, I hate saying it, Harvey. Oh, so we got a chart up here. So if we go back to Harvey, that was a massive demand destruction. For example, we didn't have power for so long. So those things are important to take in. But when a hurricane is announced, you'll see oil and natural gas go up.
Yeah, it's so interesting because of the demand destruction. Again, I mean, living through hurricanes, we're down here in South Florida, and you think about that. I mean, that's why it could be a big time two-way tape. Buy into it, right? And then all of a sudden, power's out. There's no damage to the energy facilities, and all of a sudden, it's tanking because we're not using it.
Right, exactly. And you do see that happen depending on the size of the hurricane and how many people it affects, what areas it affects. But nonetheless, it is a good trade during the time on. Yeah, but let's not have any.
Yeah, let's
exactly. And they're very unforgiving markets. They go very fast. You can't. I mean, even more. People say they fall in love with stocks, but you'll get the same idea of natural gas and oil. So people from outside the market have a different perception to what it really is, if that makes sense. And even you got to look a little bit further through the geopolitical side of it. For example, people go on about Trump putting the tariffs on India. And they go, well, if he does that and they go along with it, it pushes oil up in Russia, etc. Well, the little tidbit that's important is that Trump says, okay, if you buy it's in the document, if you buy that oil, as long as you use it to make gasoline and send it to the US, it bypasses that tariff. So that also tells me that it's not oil that trumps, because we talked about inflation earlier, you guys are talking about oil. It's more the price of gasoline. He's well aware of that. And my personal view is that percent is actually calling all the shots anyway. And I look at him as, so people say he's Soros's boy. It was actually Jimmy Rogers' boy. So if you look at how Rogers thought, particularly about China and things like that, I think we get a better understanding of what the US is trying to do.
Stay on that. Maybe we just stay on that. We got a couple minutes left. Talk about what your thoughts are on the future of Becent. Why not?
Yeah, well, I think so way back when I was somebody, I guess, a big trader, that Becent was well thought of. He had his mistakes and he's adjusted, but Rogers was kind of the doyen, if you remember, of metals, and he was the first guy to really recognize China. He had the big bust up with Soros. Obviously, they became very different people. And I think the future of Becent is he tries to go along with what he learned from. So he knows that the situation in China from Rogers, how they work, people forget it's a communist regime that's got massive problems. So all of our mainstream media is going on about how Putin, Modi and Xi all got together and, they're the new world order, all this sort of thing. Well, what they're forgetting is that these countries have a lot of civil unrest, a lot of economic problems. And I think Becent's well aware how to play that. And I think that's how they've been playing the Chinese thing. As far as the Russian bit goes, I think they're probably the view that we all are at this point, that Putin doesn't really want to stop the war because the whole economy and the nationalism and all that sort of thing. And there's so much false information from both sides, Europe, Ukraine, and Russia. And just if we go back to the bond market, there's been a lot of criticism from him on the bond market. I think he's well aware of the damage that the Nationale in France and the gilt in England is doing to the bond market, which is actually helping just the liquidity of the US market. So that, and I think the rates thing is all about this housing crisis thing. I think we all, there's inflation in certain aspects, but I think that's their probably big political move is, because they're doing the Fannie Mae thing as well. So that's kind of broad brushstrokes of the Sen. I think he wants to get those things done. There's a lot of risk in all that, of course.
Yep.
But
Yep, and we will continue to talk about it in the show. You know what, Andrew? Thank you so much for joining us. It's been a while since we spoke. I remember having you on the podcast
pleasure.
a while back. Everyone, go and follow Andrew on X at TradersCom. Great to have you here, Andrew. Thank you so much for joining us today.
My pleasure, guys. Look forward to a great show. Thank you.
A lot to unpack there. We don't have enough time to go into it, and we didn't get into a few things. Well, number one, Trump is still alive. I know there was all those.
I know
rumors.
people said that, I don't know that he wasn't,
yeah.
but I do think just really quickly to touch on here, he made a really good point about Jim Rogers, that he's the Jim Rogers boy, and if you want to look at kind of what Jim was kind of doing in his view of the world, it is very similar to Bessent's. He made an excellent point. I never put those two together, so interesting.
We'll talk about that tomorrow morning with Craig. And like I said, just a lot to talk about the energy markets. It's actually, and you look at what's happening this time of year, it is September. It's been a very quiet, almost no hurricanes, right? There's been one, I think, that got drowned out in the Atlantic, thank God, right? Down here in South Florida, we always worry about that. And so it's an interesting conversation. We never know what's going to happen, but we already know it's going to pick up the activity within the Gulf and within the Atlantic over the next month or so here. So interesting, just always to keep it in mind. Thank you so much, Shai. We'll see you in the chat.
All right, thank you.
All right, let's bring in Pharm. Good morning, Pharm. How are you?
I'm doing well. How about yourself, Deli?
I'm doing good. First day of the month, first day of September, heading into rollover. We talked about what we saw here earlier. Energy getting a bid. I shouldn't say energy. I should say crude oil is getting a bid. Gold getting a bid, silver getting a bid, bond markets soft coming in today, a little bit of dollar strength. Russell, NASDAQ, S&P all down over 1%, Dow down the least, if we're doing a comparison there. Thoughts on first day of the month?
It's looking super bullish, right? Wait, hold on. I had my monitor upside down. Give me 1 second. Yeah, I mean, look.
Yeah, turn that thing around, big dog.
Yeah, whoops. I'm colorblind. I thought that was all green. Yeah, I mean, look, it's kind of funny because, consensus has been for, I think it's a September pullback. I just posted a meme on this on X. But then quickly it became the consensus was to fade that consensus, and September was going to be super bullish because everybody's bearish. So the Vince McMahon meme just had to come out for that. But, the thing is, about a week ago, I think it was the 22nd, I noticed something in Bitcoin. It's been weak, right? And I'm not one of those kind of Bitcoin leads equities people, but it gave back a really, really powerful demand sequence from Jackson Hole a little over a week ago. And then obviously, much more since then. And it's, chopped around a little bit. And that's concerning to me because you don't really see that in an environment of abundant liquidity where everything can really rally together. And so that kind of put my guard up. And ironically, I think literally the day that before you left, we were talking about the NQ high and you were short the Qs, if I remember correctly. I think it was actually the day. That high is still in place. ES kind of farted around a little bit, finally made its own RTH high. And here we are. So, it looks like we're going to get that pullback, and that's super healthy. But it's been a struggle to see multiple asset classes bid. So, given that, the fact that we have precious metals moving, we have crude moving, it's just hard to see a bid in equities. And I think we're seeing the result of that today.
Yeah, and a lot of times I'm gone in August because August to me is a month that has so little significance. A lot of times I'll step back, do some traveling or just really just stay out of the markets and just kind of watch from afar. And, I always get ready for ramped up in September for when things start to get a little bit busier. And I think we're going to start getting busy here. Let's go to the charts. I want to start off with S&P today. And when I look at S&P, here's what I don't think that the bulls want to see, and I put a rectangle box up at the top. Anytime Bollinger Bands start to come back in and they contract, it's mean reversion environment to me. When we were going higher in here, I was watching this going, man, if we start to go and lift off and take out these highs with any significance, you could have range expansion, you could have volatility expansion. Instead, the exact opposite happened. You don't want to see a little bit of a higher high and then pull back, and then all of a sudden Bollinger Bands start to come back inward. Why does that matter to me? Well, when Bollinger Bands come back inward, it's just telling you, again, it's mean reversion to me, but volatility is contracting. And so when volatility is contracting off of a primary trend, whether it's a bullish trend or a bearish trend, because some would think, well, if volatility is contracting in an upward trend, wouldn't that be bullish because VIX would maybe be going down? This is not a VIX calculation. This is just calculating, ranges and expansion. And so when I look at this, I go, you know what? That's not good, because what ultimately happens is we start to go sideways for a period of time, which we have. And once we start to break out and the Bollinger Bands start to open up again, that's now considered, to me, range expansion. So now we are starting to coil a little bit. And we'll wait and see what happens. But I do think when I look at these lows, and these lows to me are, I typically say, and I said this earlier, August doesn't have really, I don't ever see a real significant high or low made in that month, right? I don't know historically. I'd be kind of curious of this. Has a high or low ever been made for the year in August? My guess is if there has been, it's probably been very rare, right? And so August makes this consolidation range where it builds up and everyone continues to kind of go on with their lives, and they come back in September. Everyone's back at their desks starting this week, even into the next week. And now we look at these highs and lows and say, okay, let's see what really is going to happen. So I think that the August lows are significant, because if they do start to fail, I think that could bring in a significant pullback. What's significant? I mean, how about we even look at the end of June lows, which would bring us back below 6,000. But I do think, nonetheless, if that does start to happen, I think that would be a changing character for the year. For the last several months. This year's had so many different characters, but I think that low becomes of extreme importance. The flip side is we take out these highs with any sort of significance. I think that starts to matter. Really watch it inside this range right now going into rollover. I think you have to really be careful. You have rollover 2 weeks from now, so it's not imminent. But as we lead into rollover, it could be really relatively choppy here in the S&P, and I wouldn't give too much weight into what we see until we break out these lows or these recent highs, which is right in here. I think until we start to see that, we don't really know what this market is all about just yet. But I do think it's starting to get busy enough where we're going to have some bigger ranges, and I'm hopeful that that's the case. We get some more volatility. But those are the key areas you watch for coming into this month. Coming into today, what I think is interesting is that are we starting to head towards these recent lows, and do they want to do a little stop hunt? First day of the month, I always look at Pax's opening range. I look at it every day anyway, but look at that range, that first 30-second opening range, and wherever that is, I look at that as a pivotal area. If it's a 5-point, if it's a 10-point opening range, whatever it is, watch that area on the first day of the month, and I watch it throughout the month. So let's see what happens today on the 30-second opening range, and I think directionally that will give us a lead into what today is. And if it's bearish with it's not Sunday night, but the Monday night opening range, basically the high, Wouldn't be a day that I would fade. It could be a mean reversion day back in if the opening range is the low from the RTH. Just something to keep in mind when I look at today. Also, again, look at what this low is in NASDAQ, 23,035. If this low starts to get taken out in NASDAQ, I think it just pulls everybody lower. I mean, obviously, the S&P's got a ways to go before their low comes, but if NASDAQ starts to take out today or this recent low, which is, it's not even quite 100 points away, I would be very skeptical of being long equity indexes. I think we're probably going to be headed towards the August lows across the board. So NASDAQ, again, market leader. Everything is really coiled here. You start to take out these previous couple of weeks lows. I think it opens the door across the board for weakness. We'll get to Russell. Tried to go higher. We talked this morning with Craig. We talked with Shai about the rate cuts coming. But yet, and I'll get to bonds next, the long end is going lower today, dollar strength. We're in a situation where the Russell had a little bit of a story to continue to run higher as interest rates, where everyone's looking for them to come down. Long end starts to go back up again in terms of rates, down with the actual bond futures. And they just lose their story. They lose their theme. And I've said this before with the Russell, unless you have a macro backdrop, you need more than that than just technicals in the Russell, because it continues to get faded on any sort of rally. And I just don't love it. I mean, it's just one of those markets I just don't love. I don't love the trade right now. It's not a great trade. I want to go into the bonds, and we're going to hand it over to you. Look at the bond market. This is where I leave it for today. You're taking out August lows today in the bond market. I think that's of major significance. We're coming into the first Fed meeting since July, where Fed is likely to cut rates, and the long end takes out previous month's low. What does that mean? It means that rates are going up on the long end. They don't control the long end. What does that tell us about the future of inflation? What does it tell us about the future of the debt and all these different things? I believe this is a big part of why we're probably lower today. When you have the bond market opening up first day of the month, now taking out previous month's lows, that weakness on the long end, I don't think that the equity market loves it. The equity market can look past it. Of course it can, but I think it also adds fuel to the fire. So keep an eye on the bonds today. If they continue to stay weak, I just don't think that adds any sort of confidence to the bulls coming into today. Hand it over to you, Pharm, and see what you're looking at.
Yeah, I mean, bonds just an absolute disaster, and really globally, long end yields blowing out, and all the excitement about rate cuts, which we'll probably get, barring some crazy hot jobs data. But the long end, as we saw, the first cuts did not perform well with cuts, right? They just went, bonds went lower, yields went higher. So that is a potential risk to equities. I've got my NQ chart up because I agree, and I've said this a while. Really, NQ is going to ultimately drive this ship. And here's that good high, back there at that 24,069. That has held in place. While you'll recall ES did not have a good high; it had an ETH high, and basically all ES did, last week was find its own at least RTH high, which did end up to me it's a good high. We had a closing spike the day into that high, so there's a spike up into the close. That spike was rejected, so to me that becomes excess. And I mean, look at the cues here. You talked about that 2320s, 2340s. I'm using 23 to 46 and have been for a while. I mean, we had two separate lows in here. We had that was after AMD earnings. We traded lower into there, and that was a huge trap. Obviously, rallied out of there hard. Same basic low back in August, and here we are coming into that. So I agree, if that's lost and offered and we break to the downside away from that, I think cover the buy button for just a bit, right? You might get some nice liquidation puke, and then ultimately that will be a buy the dip situation once that has rinsed out. On the ES, again, I mean, both of these markets are set to gap down well below last week's low. So that's hard to be a buyer in there. So you see the decent high put in 65.20 to 24 range. And this 64.31 to 35 has been just super, super key for us going back, right? So It was the reclaim of 64.31 to 35 that lit this move on Jackson Hole. And, now we've given that back again. So again, true gap below last week's low as of now. So in order to negate this, for ES, bulls absolutely at minimum need back above, to me, 64.31 to 35. And then you've got last week's cash hours low sitting just above there. So, I mean, you're going to have to get back into last week's range. NQ is an inside week break to the downside as of now and slated to open well below last week's low. So bullish things generally don't happen on an inside week break to the downside. And again, it puts in the trailing week low, and we've almost made it there on NQ. ES was not an inside week, but you can see we've come back and we've given back Jackson Hole, at least, overnight. We'll see if that sustains once cash opens. But, to me, ES is going to need to get back into last week's range. NQ, I used 342 to 369 on NQ bare minimum reclaims. Otherwise, I'm just going to be hammering this thing probably for at least a few days until we get, full liquidation puke. So that's really what needs to happen. I mean, there will be, intraday longs for sure. But to me, sellers are in full control as long as bulls don't negate this move. And again, to me, it's 64.31 to 35 bare minimum on ES. And it's 342 to 369 bare minimum on NQ to negate some of this.
Yeah, I mean, and here's the thing. Look at weakness has been bought and bought and bought and bought. But the one thing I will say that's different about today is the fact that the 30-year is taking out previous month's low. You come into a new month. I know we talk about rollover as well. A lot of times a move can lead up into rollover. PAX is saying that the roll will take place later this week. I don't think you're going to see much in the D's contract until after unemployment. I highly doubt much positioning happens. We actually roll on September 15th, which is 2 weeks from yesterday. So I think more of the roll takes place next week in equity indexes. But the bond markets and currency markets, they roll a little bit sooner. So again, it's going to be busy nonetheless this week as we lead into rollover. And we lead into unemployment, and we have the first Fed meeting that we haven't had in 2 months. So, it is what it is, right? And so we'll wait and see how it goes. But today's an important day, I think, for the markets. Nonetheless, it sets the tone leading into unemployment on Friday, and so we'll wait and see what happens from there. Pharm, you're the best. Thank you so much. I missed you the last couple of weeks. Glad to be back with you. And again, everybody, hit the like button for my boy Pharm. Make sure you hit the subscribe button and that reminder so you never miss an episode here on NinjaTrader Live. We're looking to the 150K, Pharm. It's going to be a big party.
Appreciate it. You have a good day, Deli. We'll see you soon.
All right, everybody. Today's Tuesday. We're starting the week off on Tuesday, and we're starting it off with a great duo. And it's interesting. I was thinking about it this morning. We've got Merritt Black, and we've got Christian trading boxes. Ever hear about black boxes? Well, that's what you've got today. Got Merritt Black and trading boxes. Let's get ready to trade the open. What's up, my boys?
Hello, hello.
Yo, yo. Black boxes here.
It's funny. I was sitting there thinking, black boxes. That's right, man. Look it. Look it. They got the black boxes in the house. Who didn't know we had that kind of power?
Tracy came up with that, not you. It's too good.
I come up with nothing, Merritt. It is. I don't even. I'm just here. I have a pretty face on screen, I guess. So here we are, Tuesday. Shortened week coming in. I know you guys are. I know we're going to talk a lot about preparation. And first of all, I'm going to say this: the last time the two of you were together, I wrote it in the chat. It was phenomenal. Really love seeing two different traders go about it, put the work in behind the scenes, come down. And what I think I admire about you two, and I think that the audience does as well, is how much your preparation leads into your execution. And you guys just don't veer off the path. I mean, and you guys talk about that and stay on that. And I think that today, everyone, when you're watching, again, watch the nuance and execution between these two guys because it's phenomenal. Like I said last time, it was a master class on it. But I'll let you guys pull up the charts. I don't know who's starting first. Because I know we've got going to be a busy day. It looks like we got Merritt. Any positions coming in today to start, Merritt?
No positions at the moment, Crudele. Obviously, we have a real barn burner of a day here. Um, and I take it right back to the profile information. We had built a balance lower, if you recall from last week. Not you, but you, chat. I don't know what you were doing. Maybe having a Tito's somewhere exotic. But anyways, we rotated up. We put in a nice balance, and then what have we done? In the Globex session here, if you look at the short-term chart here, we have ripped all the way down back into the meat of this guy. So that's my context in terms of what's going on here. Some of the bigger picture context with some of like the longer term VWAP type stuff is that, look, we've been coming out of this sell-off from April for quite a while now, and we had reached real upper extremes relative to, let's say, the yearly developing value and where we are on that framework. And we'd kind of been grinding around that 1.5 upper standard deviation area. And whenever you're in that mode, it's, carefully, can you get away with riding that? And should you? Yes. But we know what's around the corner whenever we're there, and it's the deeper pullback. And that's what we're seeing here today. And so the developing value for the year is not down until 6,300 right now. So that's kind of a spot where 6,300, 6,310, I think is a good little zone there for where this market is trying to get to right now.
Yep. Christian, what are you looking at coming in this morning as we prepare for, I think, a busy day and probably a busy week?
Yeah, so I'll share a little bit of my planning that I do for NQ here. All last week we were holding this 430 zones, and it was sort of that ball bounce effect where every bounce kept being lower and lower, and eventually you broke that overnight. We've moved below this 330s zone that I have here and into pretty much almost close to that low in August. There's like an area of support here between 80 and 130. And so if we can hold here, I see we can get a relief bounce to test some upper resistance. If we fail and we're just seeing a strong sell-off at the open, then the next support area that I have is this 22,960s area. And if that fails, I think the overall daily structure is failing. We can see August 1st lows, which is 22,700. And then for the hourly here, I will say that if we can still continue to hold this, 080, 130 zone, there's a chance that we can see a relief bounce. We can test the prior all-time high at 222 and then find resistance there, reject. If we're able to go up higher, we do have 280s that I'm looking to short. I'm in selling mode at the moment. If we cannot reclaim this 130 area and we get stuck here, then I don't see why we can't really take out this August 20th low at 23,000 and then maybe reach down to 22,980s. But to me, what matters here going into the open is this 080 to 130 area that we're opening at. Either we hold here and we reclaim and move up into to test some upper resistance, or we move lower and take out that August 20th low.
Yeah, it's finally a time where I think we're near the edges a little bit right here, Merritt, where we're the edges of some range, which again, we'll see how they react when they get to those edges. And it's a time where we've got a lot of data ahead of us as well, which I think is going to spark interest. You're going to have more bodies back at the screen, which is a good thing for markets. I think August is finally, that month that we always say is when everyone's in the Hamptons, I think is behind us. I think we're getting ready for a busy Q4 in September leading into Q4. Real quick, Merritt, before I let you go, last week I was listening to you. I believe you were doing some ES stuff. Is ES going to be more of a market focus, or are we back to NASDAQ? Are you looking at even gold? Because we didn't even talk about gold is breaking out as well, and I was wondering, where your head is, what market you're trading.
Yes, so for me, it's still multi-market, about a dozen different markets that I look at for really good NADRO style opportunity. But then when I have made a change, as you picked up on, when it comes to my intraday scalping, shorter term stuff. I currently prefer the S&P over NASDAQ, and it's been a couple of years since I've said something like that. So substantial.
And then for you, Chris, coming into today, is it mostly NASDAQ? I know you're primarily NASDAQ. I have seen you do some S&P stuff, but is it NASDAQ the focus today?
Yeah. All I do is when times get volatile like this, I just decrease my sizing.
Got it. All right, everybody, show my boys some love. The Black Boxes group is in the house here on Tuesday on NinjaTrader Live. Like I said, we're on our path to 150,000 followers on YouTube, and we will be throwing a virtual party of some sorts here. Who knows? Who knows what comes with this 150,000? So make sure you subscribe. We're going to be doing a lot of giveaways, all things aside. We're going to have a lot of fun. And we're close. We're only, 5,000 away. So hit that subscribe button, hit that like button, show my guys some love. Follow them on X and check out what they're doing outside of X as well. Guys, great having you here. I'll be watching.
Good to see you back, man.
Take care. Yo, Merritt.
Hey, brother, how you doing?
Good. How about you? Good,
man. It's funny, the whole concept of a black box type strategy. I feel like of any of the entire NinjaTrader Live crew, you and I are the opposite of that. We actually have, some of what I would say is the most refined, process-driven strategy approach. So we're kind of the anti-black box, aren't we?
Yeah, that's funny. We are. I think the audience likes that, seeing us two together. A lot of knowledge you have, and if I can trickle in a little bit here and there, I think it makes a great stream. What are you looking for today?
Man, it's one of those days for me where volatility's picked up, so that's good. There will be some short-term opportunities. That's going to be kind of arising out of thin air with how the order flow, like the cumulative delta, those type things start to shape up as we trade. But in terms of in terms of the S&P structural ideas, I don't have a good trade location here. I don't have a good spot where, I would have loved to have been short the breakdown while I was sleeping last night.
Yeah.
Or I would love to be long, like I said, if we get into that kind of 6,300 area, quite a bit ways lower. But right here, it's kind of like a bearish bias. But I'm going to keep my eye on the tape and look for shorter term opportunities. No long term stuff for me currently.
Yeah, that's what I was going to ask. I know you try and position yourself for swings. You don't see that here at the moment, that opportunity for
not low enough
the downside.
Yeah, not low enough.
Oh, to the long side. Do you put on short at swings or no?
Oh, I don't care what I'm not Stowe. I'll trade it both directions. That guy's a long only machine. It's actually I don't know if you were watching one time. I did this we're going to give away this $3,000 course. It's going to be awesome. Everyone guess what price Stowe's long from. And he came in short or something for the first time ever. So I'm sure that I shouldn't. Sorry, chat. Too soon. Shouldn't have mentioned that one.
That's funny.
Yeah. But no, I didn't. Again, when the market goes into that all-time high grind, like I was mentioning, around that plus 1.5 or something, mentioning with Crudele there.
Yeah.
A lot of times these drops kind of come out of nowhere. It's not like a market for me that's trading with a really good rhythm, really good higher time frame ebbs and flows, and we really get extended into a +2 and wicked and start to turn. To me, as long as I get some lower time frame confirmation, some kind of ways to access that idea, that will absolutely be like a swing short opportunity. When it's grinding, and then just starts to plummet, there's really no chance for me to kind of get into a longer term position from that. Now, if things start to fall apart, and by fall apart, I mean if the yearly starts to become rather than an uptrend, which is what we're defining it as now, that
Yeah.
6,300 area, if we really break below there, then I can really get aggressive on the short side and play retest a kind of back into that upper extreme for the year to really look for a bigger traversal. Currently that would be around, let's call it 5650, right? That's a long ways down.
That is far.
Yes. So yeah, that's kind of my approach. I define the current market condition. Are we trending up? Are we trending down or sideways? Like you do.
Yeah.
And depending on what that is and what that is across multiple time frames, depends on what kind of trade ideas I can generate.
Yeah. Context
Yes, sir.
and location.
Well, context creates the location, right? And then reactions from the location dictate how we can access the trade, whether or not that. A lot of times I set a bias from a reaction from a contextual area, and that bias persists until a target is hit, right? And until that moment, then it's like, well, how much risk reward, how much meat are left on those bones before we get there?
Yeah, I agree. We'll see what we get here at the open. I would like to position myself swing short as well if we do get a bounce.
Walk me through scenario. What might that look like for you?
I have major resistance in NQ at 330 to 360. Sort of if we back test that prior week low. I think if we do that, I will look to position myself short only because per the trend structure that I follow, on the weekly, we sort of reach third higher highs, and something that one of my areas of focus are how trends start or end. They typically end at the second higher high, meaning like there has to be like, I'll touch over that so you can see it visually.
Yeah, I remember that from our last stream. But when you say weekly, are you talking about an actual weekly bar chart?
Yeah.
Okay. So big picture. All right.
Yeah. So the weekly, so I swing trade stocks as well. That's like my first love. And so when you reach that third weekly higher high or monthly, like in 2022, that was a big monthly, third monthly higher high, that typically ends the trend that you've been in that time frame. And so we've been in that structure for the last few weeks. We've been sort of consolidating above the third or at the third weekly higher high. So this breakdown here is confirming to me of the internal structure that is now leading that breakdown lower, which confirms the reversal on the weekly. So if I can position myself short on a bounce into that resistance, then I am looking for a move into the 22,200 area in NQ. For ES, that would be around 6,100.
Kind of those June highs, that area.
Yeah, 6,150, 6,160s. And that would sort of, if we do sort of get that, it'll confirm that the overall governing structure for me on the daily time frame, it's now bearish. Even though the weekly at the moment, or the monthly may still be bullish, the internal structures are sort of telling me now that we're flipping bearish into what could be a daily downtrend and a monthly or weekly pullback. And so I want to participate in that with a swing. And then in intraday trades, I want to be short and ride that daily downtrend.
Love it.
But we'll see if
You ever
we
trade
get
any
that.
gold?
I swing trade. I'll swing trade gold. I won't day trade it. I think the only thing I'll day trade is ES and NQ, and then I'll just swing trade everything else. Oil, I've swing traded that. But yeah, the daily, what took place last night sort of confirmed that weekly reversal attempt.
One thing that I look at, chat, as you know, is order flow, and it's always substantial if we're coming into the open and the delta is beyond, for sure, plus or minus kind of 10,000. And so here we're at minus 14,000 on the delta here. So that lets us know that there is energy, there is participation, there is activity, there is a sense of urgency with some of the trading that's going on in markets right now. So this is good. This is good. We love it.
At what point does that become more of a, oh, the rubber band's too stretched, let's revert back?
I don't believe that that's the case with a delta reading per se.
Okay.
Sellers can just continue being the more aggressive participant. But I absolutely believe that and use that with the standard deviation bands and whatnot
Yeah.
relative to those VWAP frameworks that I talk so much about. So for me, we had been stretched on the yearly VWAP, right? We were stretched high plus 1.5 standard deviation. And this is that normal snap back towards VWAP for the year type of move. And 6,300 developing value high for starters.
Okay.
But yeah, order flow, I don't, it's never too high or too low, right? Where you're thinking, oh, this needs to revert.
Yeah.
I don't use ATR per se, Shreddy, but I can tell you that the kind of average high to low range, ATR includes the gap. So I don't actually measure the gap. I just measure the size of the 24-hour bar or 23-hour bar, the Globex bar. And my average, I think it's like a 10 or 20-day average, is around 62 handles in the S&P. And we are already at 104 for the day today. So range is elevated compared to the norm. Yes,
Yeah.
sir.
Good morning, chat. I didn't say good morning to all you guys. We have 920. We're starting off close to 1,000 before the market opens. We got to get those likes up.
Slap that little thumbs up. It's good for the channel. People helping people. What movie is that quote from? Do you know, Chris? People helping people.
I think you're thinking of slap the bass or slap the bass. What is that saying?
No.
Yeah,
Anybody in the
from I Love
chat
You,
know?
Man.
Yes, the manual trader was first in. Wedding Crashers.
I don't drink any coffee. They're asking how long before you stop drinking coffee. They don't see any of us drinking coffee live.
Cheers.
I can't be that wired going into the open.
Cheers.
You have something? They said coffee though, Merritt.
This is coffee. I mean, there, a little bit of bourbon, but it's mostly coffee. No, friends in 10. I did fix the coffee machine. I had the long weekend, took care of some stuff around the house. Definitely ran the descaler. We're good to go. But no, look, coffee is a very it's a very personal thing. It's a very different thing for different people, right? Some people, for example, if you drink a coffee at 4 o'clock in the afternoon, you're not going to be able to sleep well, right? other people can have a coffee or an espresso right before bed and it doesn't affect them. So caffeine's effect on people is very, very unique. If it gets you too amped up, too hyped, jittery, those kind of things, then yeah, that's not good for you kind of coming into the open. I do know some traders who found that cutting out coffee has been good for their kind of, let's call it psychology. It's a little bit more their biology, but let's call it psychology
Yeah.
coming into the open. For me, it's not a big deal. I don't feel overstimulated. I don't feel overly amped up. Um, Coffee is one of my uh, daily routine little pleasures in my life.
All right, we have 6 minutes here for the open. We're consolidating that support area that I see 23,080 to 130. Yes, there's a 63.93, 90 area that I have support as. It's holding that. Can we see some sort of relief bounce? I don't know if you have the same level for yes, but 64.20s has been a pretty big, important level for me. And I'm thinking that if we bounce back into it from the downside, that can act as resistance and a good short opportunity can present there.
I see that from a
Like 64.18 to 25 area.
yeah, I see that from like swing highs from August around August 7th, swing highs from around August 20th. I definitely
Yeah.
see that as like a um a level. Doesn't quite jive with mine. So like, oh, I forget that they're not showing my full chart book. Anyways, if we look at my profile structure, um, it's really that kind of upper edge. So like, I'll just draw it like theoretically for us here if we have time.
Yeah, we have 4 minutes.
Oh, here we go. They're showing it now. So like this area is the upper. So what a lot of support resistance people do is they will look at kind of the extremes, like you mentioned, if we can stay and retest last week's low, right? So that's kind of the extreme of the entire range. What profile people tend to do, and I'm not saying it's better or worse, just different. What profile people tend to do is rather than looking at those extremes, they look at where the value area is, where 70% of the trade occurred, where the kind of the thicker area of more trade and the edge of that rather than the edge of the range. So a lot of times I think if you and I were to reiterate like what's your level from like this sample piece of chart or this sample chart or this market, your levels would be outside mine. Mine would be inside, yours would be
Yeah,
outside relative to that range.
I see. All right, we have 3 minutes here. Let's see how the open goes. I don't have any sort of setups here. I mean, it would be aggressive for me to try and buy this. I do think we can see a relief bounce, and maybe this is the start of it, but I'm also interested in shorting that bounce.
Yeah, that's the one. That's the killer of moves like this is a lot of people say, and I think the last time I looked at the poll in the chat, it was like 60 something percent bearish, right? Guess what happens when the market's 60 something percent short? Short squeezes, right? And that you get those bigger rips that shake out that inventory. So it's tough. You got to pick your spots, apply the appropriate tactics for the level of volatility.
Yeah.
I've got my little short-term algo on today. That's what all these little red and
Circles.
green, yeah, dots, or even some it's hard to see, but it's at arrows or triangles. It's different signals all wrapped into one kind of thing, so I can see kind of the average output of a couple different short-term features. So I am firing off a little two actually of the bearish signals like we had got up here earlier. It's just a tool. It's not like a strategy. Well, it's literally a strategy in NinjaTrader, but it's not a complete strategy. It's a short-term timing, scale out, potential entry point type of just visual helper that I've been working on. So we'll keep it on the screen today. Pretty cool, the kind of stuff that we can vibe code up these days. What a time to be alive.
What a time.
What a time.
All right, we're about to open here.
Ding, ding, ding.
All right, initial resistance for me, 130s. We bounced into it, rejected. We continue lower. I have 23,035, which is that August 20th low. Looks like we're going to take it out in NQ. Yes is following. All right, while we wait, I'm going to manage some of my swings.
AQ, it's called a back adjusted contract. So when those rollovers happen, if there's a 50-point gap between, two contract rolls, whether it's month to month or quarterly, whatever market you're using, the back adjustment will remove that difference and make it as if one flows seamlessly into the other. So for longer term value type of calculations, back adjustment is a requirement. Almost all charting platforms have the setting for you to be able to back adjust the charts. Even TradingView has that. So that's how we get around that. All right, so I keep forgetting you guys you can only see one screen. Anyways, lower edge of that prior market profile composite value area is 63.82. So the market approaching the lower edge of that. I'll be looking to watch that inflection. I wanted to short the open so bad. If we could have traded up a little higher, as you can see the edge of that distribution here, which again, just for everybody's knowledge, comes from this little balance area that we had. If we could have traded up to that, if you look at the right-hand side, the intraday chart, couldn't quite retest it. I was getting the algo firing off the bear signals. Nobody was buying it on the tape. It was pretty nice. I was just looking for a retest higher with the open volatility. Didn't get it. That's okay. So now we have reached the lower edge, 82.50.
We took out that August 20th low in NQ. Starting to see a bounce now. I look at divergences on the 15-minute. We're setting up divergence now on these new lows.
Divergence, what relative to what?
In RSI. I got
Okay.
delta in RSI.
Okay.
So for me to really engage in anything here, I mean, we're just super extended. We, need more structure here. We've taken out August 20th low. Below that, I have 960s a zone there. We really need to reclaim for higher. We need to reclaim this 100, 130 area and push out higher. if we cannot, and then we form acceptance down here, which for me is sort of like a wedge contraction, then that can give a breakdown short idea for me that I might engage in. But at the moment, there's really nothing for me here.
For the Nadro folks at home, remember when your intraday rotation size is as large as prior multi-day composite value areas, you have to treat them a little bit differently, right? You've got that big pickup in volatility relative to what we were forming before. Just keep that in mind. Yes, it is interesting. On my charts, NQ is actually reaching some of the destination areas for the sell-off, as opposed to the S&P, which has a lot more room to go to get to the areas of sell-off. So that's, again, as you guys know, I'm not a fan of ES is doing this versus NQ is doing this, therefore I'm doing this. I'm not a fan of that, personally.
Yeah.
Whatever floats your boat, go for it. But I've yet to see somebody really, really be able to manage that information consistently and properly.
There is a strong case for that scenario that you brought up. NQ did take out August 20th lows. ES did not. That what the ICT traders call that a SMT, which is just a divergence between the indices.
Mm-hmm.
So that could be a sign of a reversal here, just like how last week I think ES made a new all-time high and NQ didn't. There's a case that there's a divergence there, but I don't know much more into that.
Which one is the opportunity? The one that's
So
down more, or the one that's up more?
If you're shorting, they say it's the weaker one. If you're going long, it's the stronger.
Okay, understood.
I just trade the NQ, so I just, to me, regardless of what happens, NQ will be the one that provides more opportunity for you based on a risk reward basis, because it'll move substantially more.
Mm-hmm.
You can make 6R, 8R, 10R, while ES you make 4R, 5R. So to me, it just makes sense to trade NQ.
I think what you're saying is generally true. I really do. And that's coming from, as Crudele asked me about earlier, me who has moved back to trading S&P instead of NQ. Why might that be? Well, what's the other side of the equation? It's not only risk reward. For me, it's win percent. And I was starting to have a win percent issue with NQ, where I found some cleaner signals, some more truthful signals that I can kind of lean on and believe in the S&P relative to what I've been seeing in the NQ. So for me, I agree with you. Risk reward potential is bigger in a market like NQ, but some stability of signal for me is why I went back to the S&P, at least for now. It could change tomorrow.
Yeah. All right, so we're seeing that we're talking about divergences. We got that RSI divergence into that new low. We're seeing this reversal now, and then NQ is trying to reclaim the 130s area. If we can form acceptance, then I'll consider it a long opportunity. But I'm still looking too short, so it's a little bit of a mixed playground here for me. I think on a bounce, we can go up to 222. And then I can look to engage short there.
Wow. NQ Delta is flat for the full Globex session, while S&P's is hanging out down here at almost minus 20K. That is way more interesting to me than price differentials. That is fascinating to me.
Yeah, that is pretty crazy.
Just think about what that means just practically, guys. It's people in the S&P have just been slamming the bids, just saying, get me out or get me short, right? We don't know if it's new positions or getting out of old positions, right? So you end up with a very negative cumulative delta. In the NQ, we're trading around 0, which means that the down move has been an equal playing field of aggressive buys and sells. It's wild. Less panic in the NQ. My algo's giving short signals again.
Yeah, ES is failing to really, at the moment, reclaim that 93 area. I mean, I talk about levels a lot. I look at zones a lot. I think he's leading. And, you know, I swing trade stocks too, so I'm watching those, and a lot of those tech names are bouncing. I'll look to engage if we can hold this 130 zone in NQ. If not, this will most likely fail and then maybe push back down. But I think as long as this last low holds that we've just put in, I think we can have some sort of like sideways to higher structure. Although ES does look very weak. Yeah, cyclicals are getting rocked here. Financials, industrials, while tech is bouncing and helping NQ.
I'm just drawing this CVA zone over here for everybody at home. I would just see this chart so you can see kind of my context mapped over. So algo signal short, but that's coming off of reaching the lower edge of the profile distribution. So not the best combination, right? It's always about what's the context that leads to a potential algo signal short. As I mentioned around the open, I would have loved this one from a little higher. I may have been a little too picky, but no, I wasn't, because we were coming into the open of a very volatile session, and I expected a little bit of fireworks around the open. And so I was just more selective rather than just, yeah, let's go ahead and just put something on leading into the open. Hey, Ralph, how you doing, man? Yeah, a little new algo work there. Not new. I made it last year, but I'm pulling it up on the stream here today, trying to monitor it in real time as I'm doing some couple more quant projects in the background.
Uh, 220 area, 222, Steve, is a prior all-time high that we've sort of interacted with. So I have that as my first sort of resistance. And I'm looking to see if we can, you guys hear me talk about wedges, if we can sort of find acceptance here above 130s, that will indicate to me that, hey, we are sort of at the moment holding above this most immediate resistance, which we sort of tested that in the last 30 minutes before the open. If we cannot hold it from the upside, then that'll indicate to me that buyers are stepping in from this initial sort of low that we bounced from, and then they're stepping up higher into that 130 area. They're not letting price move back down. And then in that negotiation, we create some sort of a, acceptance, a wedge structure, and then I can sort of participate or engage in a long. If it fails here, then I wouldn't be surprised if we come back down to test the lows or make a new one. So it's all about 130 area for me here if we can hold it. And it's just a waiting game until your rules are met.
Yep. Slap that on a post-it note in front of your on your screens, guys. It's just a waiting game until your rules are met. Reminds me of one of my favorite quotes. Let me see. I gotta look it up because I always butcher it. One of my favorite quotes that I have to look up because I butcher it. Here it is,
From
guys. You're gonna love this, Christian, if you
from a
haven't heard it
movie?
before. Gary Kasparov is one of the greatest chess players of all time.
Okay.
Probably what people say is the young gun. Well, he's kind of getting old himself now. You know, old is a relative term. Magnus Carlsen, who kind of became the best ever. But I think Gary Kasparov was considered the best. He was the one. I don't know if you know the story, but like when IBM came out with like what was it called, Deep Blue or whatever, the first like chess algorithm,
Yeah.
and famously it beat Gary Kasparov. So that was kind of the a big deal then. Anyways, the quote from him is, "Tactics is knowing what to do when there's something to do. Strategy is knowing what to do when there's nothing to do." That is
Yeah.
deep. That is deep, guys. That your strategy tells you when there's something to do versus nothing to do. And the tactics is knowing what to do, but only when there's something to do. That's what happens with, quite frankly, a lot of order flow people. All of a sudden, they're all tactics. It's all everything is an opportunity for action. When in reality, you need to overlay some context. You need to overlay some strategy to then know when and where to deploy the tactics. Big time. Big time. It's magic stuff. Oh, interesting. Harry says that Gary won that human versus machine the first time, and then they went back and I guess revamped the algo and beat him the second time. Although I remember something about he got frustrated or something, and I forget the story. Anyways, like he kind of went off the reservation in that second match. He didn't like play as good as he is capable of. He tried to do something silly. I can't remember. Ah, it was the other side. Deep Blue made a random move that confused him. Yeah. It's funny. That was the beginning of the downfall of humanity, right? When Deep Blue beat Gary Kasparov. That was peak humanity. Oh me.
Yes, still struggling.
No buyers
NQ
showing up in the S&P on the tape.
NQ seeing a little bit higher. No structure here yet for me to engage.
Order fill. Order fill. Order fill.
Oh, you're short, huh? Oh, that's a good one.
We'll see.
All right, so we have now a little bit of a consolidation here in NQ. Not enough structure for me to engage in a long. However, if this sort of recent high low fails, then there could be a short opportunity. But at the moment, there's really nothing like that. It's moving back up. And we're close to my first target up here at 222, but there's no structure for me here to engage on a long. So there's, the move can happen without me.
Little more buying on the tape than, well, I'll put it this way, the most buying we've seen on the tape for the session here. Short-term signal, not major ground earth-shattering news.
Yeah, pushing out, moves happening without me, really no structure here for me to engage. Market overall is bouncing. A lot of tech names bouncing.
Yeah, that definitely is a continued shift on the order flow. Buyers kind of in control here short term for the first time.
Beautiful. Yeah, that was a classic fell breakdown.
Mm-hmm.
Just no structure here for me to engage. So maybe I'll keep an eye out to see if a reversal short sets up into a bounce in resistance.
Dan going for the gap fill. You got a trade on, Dan?
All right, 222's hit. Above that, we have 280s in NQ. Yes, held at 93 area. 64, 18, 20s. I mean, that 20s is an area I definitely would like to short.
So PMI in 8 minutes. And then it looks like Trump is talking at 2 p.m. Eastern. That's really all on my calendar. Yeah, thank you, Tracy. So market profile for the win so far here, guys. Accepted into this balance area, tested the lower edge of it, diddled around for a minute. The buyers were really, really weak off that low. I attempted a short to then go for the second move low push to attempt maybe the breakdown. And that was the exact moment where the rug pull showed up, and we noticed, all right, as you know, as I was stopping out or scratching that position, buyers were the strongest we'd seen them, right? And then boom, that continued, a lot of delta, and we're currently flirting with trying to break out of that lower balance area. So if we start holding 6406 from above here over the next couple rotations, not this is just a little test above right here. This is not like a breakout for me. No acceptance. We would need to see more substantial rhythm rotations above the area. But if we start doing that above here, it's all systems go for a temporary reversion, higher during this bigger picture sell-off. A lot of times we talk about deferring to the lower time frames. We talk about using structural profile areas to help determine when and where a bigger picture view or idea might be appropriate or not. And this is a classic use of that here. Okay, this lower distribution, it's not setting our bias. It's not setting our overall plan for the day, but it's a very usable structural area that we can lean on and see what price is doing relative to it. Yeah, exactly. Merritt short, pump it. Pump it.
Love if ES can get to 20s. NQ to 280s. That was a big reversal. Who's making money over there in the chat?
Dan Hampton.
Dan Hampton's making money.
Dan Hampton's making the cashola. Mike Allen says me too.
All right, so ES is creeping up into that 64, 18, 20s area. NQ to maybe 280s if we get there. I would look to short that.
JD long some nat gas. You love to hear it. Ho. Huh. Nice work in the chat. A couple of you caught the bounce there, just looks like. Nothing super interesting here, just a reversion to VWAP for the session. Again, just to reiterate, I'm waiting to see if we can get, more of a movement that holds above this level here, or to see if we revert back into it, right? So some of this type stuff where we threaten the lows again, or if we really start holding above here for continued move up to the upper edge here, back up to the edge of this 6460 area. Sorry, you can't see that on this chart, but it's right here. The other composite value area low is right there, 6460.
Yeah, just hanging out at the moment.
Mm-hmm. Let's see, 6460, 6350 tonight.
Maybe one more push in ES to really get into that 6420s. NQ the same for 280s.
News about to come out.
Oh, in a minute here.
Hmm. Steve, I think anytime you have a market that's in kind of a risk off mode in indices or something and volatility really picks up, the book is going to be more thin than during a normal, quieter period. That's just the way that it's the chicken or the egg type of thing, right? It is the thinner book that allows for the higher volatility and whatnot. So it's kind of synonymous. All right, news out, little push higher in indices.
All right, there's that push, like Merritt says. To me, that's testing resistance now. I'll look to see if there's a short opportunity up here and look to take that. Because now at this point, both ES will really need acceptance up here and will need to consolidate up here for me to know that it is going to hold the 6420s and then push out higher. If not, it's still resistance until we get that piece of data. Same for NQ here at 280. So if we can hold 280s and we'll be pushing up into that 330s, 360s prior week low area. But we need some acceptance up here now to get that push.
Happy birthday, Bear, and nice trade, sir. Yeah, Isaac, all of our training and everything is remote, so that's no problem. We got people all over the world in our community. And that would include our desk, that would include the training, all parts of Apteros. Only limitations we would have on the desk side is if you're coming from a country that is commonly not allowed to open a US brokerage account, places like Afghanistan, stuff like that, then we're a live desk with real money. So if we can't open a brokerage account with you, then we can't trade with you. So yes, awesome. Yeah, AQ, that's a poignant question. Germany has those really stringent rules around what's viewed as, you're almost like a money manager, even if you're just trading prop. It's complicated. So I can't speak to the legality of that and all kinds of stuff. I know different people do different things in terms of running it through a company rather than as an individual and some stuff like that. But I couldn't fully speak to that from my seat here in the US. Our junior desk is run through Dorman trading, which we run it through. I mean, that's the FCM, but we run it through the guys at Edge Clear. So if if you want to check if you will be able to have an account with us, just you could check with those guys, or you could check with our support team as well. You short yet, Chris? You stalking it? You
I
got the
am. I
acceptance?
am. I'm waiting here. I'll try it. See if we'll pull back. I mean, I have to try it just because of how strong this 20s area in ES is for me.
Yeah, this has been part of your plan since pre-market. You're just
Yeah.
executing on it in my view.
I don't like that we're fighting this big reversal that we saw. So maybe it leads to some chop or consolidation. Let's see how it plays out.
Yeah, to reiterate that I think that there is a little bit of a change, from my tools, right? Not your tools.
Yeah.
We did see a change in the tape. We saw buyers kind of start to dominate a little bit. That doesn't mean that that's going to persist. At a certain time, after all you've done is sell aggressively for hours, it makes sense that the buyers have a little bit of breathing room for a moment. So right here, in my view, it depends on what do these sellers have, right? And they're showing back up, not as aggressive as the buyers were, but they're showing back up. And now we are going to have to contend with this 6406 in the S&P area that we were unable to stay inside of. So that to me is the crux of the downside, just, a different view. Which, by the way, chat, should be meaningless to Chris because he's trading his process. But that's kind of fun. The fun part of this stream is that at any moment we can compare and contrast what our tools and processes are telling us. And it's fun to kind of keep track of those kind of things. And
Yeah.
we all learn from each other, and you guys learn at home, and it's a beautiful thing. People helping people.
I think for me to engage on a long up here, we will need to really form acceptance and prove that we'll be able to break above the 6420s in ES and then NQ 280s. I think above that opens another sort of like hourly push, like a 30-minute move. I don't know how you look at that. I see it like as an hourly, I call myself an hourly trend trader with a 2 or 5 minute entry model.
Right.
So I want to participate in that next window of trend. And I think for me here, we need to have data telling me that we are ready to get that second window higher. I don't know how you view that or how you guys analyze that.
So pretty much none of my charts are time-based to start with. So it's difficult for me to kind of speak to the hourly or different things like that. For the NQ, right, I'm looking at a 10,000 volume chart, a 50,000 volume chart, a 150,000 volume chart, and then, yes, a time-based daily bar chart. So it's difficult to speak to kind of those time-based
Yeah.
what's going on. We have certainly broken down from last week's value. You know, you were talking about kind of that what is it, 23 360s or 330s or something, as kind of the
Yeah.
an area. So for me, it's the edge of that, again, an interior level. It's the edge of that distribution, which is going to be more around 420. So that would be the real line in the sand there from last week's perspective of where things were. A little push lower here for you.
We have almost 1,200 viewers and not enough likes, guys.
Hey, maybe they don't like it. Hey,
You don't like
let's
it,
be
my
honest with
short.
ourselves. Maybe they don't like it at all.
Very true.
Yeah. Feel free to give a thumbs up or a thumb down, my friends. Tell us how you feel. No, support the channel, guys. It's awesome stuff here that's going on. AQ, don't like the NQ short. The monthly is at -1. Often looks like a breakdown, but most failed. I mean, AQ, we can't really speak to the monthly yet because today's the first trading session of the month. So we don't have a monthly. We don't even have a weekly. All we have is intraday, quarterly, and yearly right now. So can't you use old monthly the first 2 weeks? Okay, so monthly prior value. Okay, I hear you. I hear you. So this is a retest up into monthly prior value around kind of this 230 area, let's call it, which would therefore agree with Chris's short, actually, right? If this area can hold, it's a breakout pullback of monthly prior value.
Yeah. So far, we're holding here a bit. We're not getting that rejection, that first initial rejection. We're not seeing follow through lower.
Yeah.
ES is sort of respecting at the moment that 64.18, 64.20s area with this recent bounce. And maybe the strength continues and we see higher. Everything's a little bit sideways at the moment.
Yeah, AQ, I love that. I love that pushback for the monthly. The acceptance, it's way wider. So that is absolutely true. You wanna read acceptance and whatnot appropriately. So monthly prior value is, again, call it 230 up to 780. Okay. So let's see. Let me get my calculator here. Should be able to do that in my head, but let's just. So it's
What is it?
550.
What's the math?
I'm calculating the width of last month's value area in NQ. So it's 550 NQ points. Okay. And I'm having a little exercise here with NQ, with AQ in the chat, because he's making some really good points, but I want to talk about it on a deeper level. So the low so far is 23,024. Okay. So 230 minus 024 is 206. So the low that we got to, the distance, is 206. What I'm trying to get you to come to the conclusion of is that what is the distance of 206 relative to 550? Right? What is that, like 40%?
Yeah, sounds like it.
37%. So if you want to talk about acceptance, I think a lot of times the concept of acceptance needs to factor in what is this movement, right, at X relative to this movement at Y, so that you can get a sense of, is that just, if this is the zone, is it just a little wick through where this distance is so small compared to this distance? Or is it actually a substantial move relative to the distance of the full value area reference that's in question? So, a little in the weeds there, a little bit further than a lot of like discretionary NADRO traders would want to go with this, and that I even go with. But I think it's a little bit of an exercise in a mental model that you can think of to determine whether or not a move has gone far enough to where we could say, yeah, that's actually acceptance outside or not. Some people prefer more of a rhythm-based movement, and I think that's a really nice way of doing it as well. But AQ says, my rule is if I'm not really sure, I skip it. I'd push back a little bit and say if you're not really sure, what do we teach in NADRO? Go look backwards at the moment in which you were really sure, where the clarity was last seen in terms of acceptance, and then continue that read until you're sure it's different the other way. Which maybe is exactly what you're saying. So anyways, hopefully some people in the chat liked that or didn't. Give us a thumbs up or a thumbs down.
It's not giving me much. So far hit half R. Not enough to take partial on, and now we're sort of bouncing back up a little bit sideways. The last I would say 30 minutes.
Yep.
A little bit sideways. Can be a form of acceptance up here. Not enough for me to say it is. Looking at the hourly candles, we're at a doji candle, so indecision, consolidation. I think if we are to push up higher from here, then from that morning reversal failed breakdown, then this sort of consolidation will mature and then make that additional push up higher.
A little bit of a lack of selling on this last attempt to push to retest the top of that structural area that I have over in the S&P. Not a lot of delta behind that little down leg.
If we start holding here above this last, gosh, you didn't look at time frames, about this last recent, let's say, call it low. I think that's your 64, 06, 07 for you. So to me, if we can sort of now start to hold above that, then to me, that'll tell me that the structure is leaning sideways to up.
Absolutely. And it's all about this rotation. Remember earlier when we were like poking up right here, I was saying, look, this is still just a test of the upper edge of this structure and zone. But now that we have a really nice full down rotation that's fully above it, for me, it's full acceptance above this area here. So this is this is a kind of a bullish line in the sand here, short term, right? It's not the full picture.
Yeah. So let's see, trend wise on the 2-minute here for those who follow along that, the initial 9 MA uptrend that we were in ended. The loss of that sort of uptrend from the failed breakdown is what triggered me short. We did move back down into this first area of support here to make in a swing low. And now we're bouncing back up and sort of holding structure a little bit better. So it tells me that it wants to hold and see a little bit higher. So a new high would make sense here after this recent structure. I'm going to give it a little bit more time to decide what I do here. I would like to engage in a long still, but there's no real structure here based on my rules to show acceptance, sort of like a wedge structure here. Maybe an aggressive one. I could say yes, aggressive here, and that's triggering right now.
Buyers coming in aggressively here at the hard right edge in the S&P.
That is looking like a push higher.
Yeah, HK was asking a question for you that I kind of had in my mind as well. Like, what do you do in this case where you have a current position on, but it's almost like you see the potential to stalk the opposite?
The aggressive trader in me will look to get long. I try not to show that side so much here. Because people may not understand what we're looking for and how we engage in scenarios like this, and they'll see, oh, you're flip flopping or you're flipping back and forth. Yes, that does happen, but when your trading awareness gets to a certain point, you know what the other side of this is and the move that could happen, and so to you, it's a objective based sort of decision, and the background context of that.
Mm-hmm. Yeah, as an educator, a mentor for traders, both just students and guys on my desk, it's always difficult to show sometimes what you do at a very advanced level.
Yeah,
because that's very different than literally what you tell people and teach people when they're trying to come up the curve and learn the basics. It's like, no, don't ever do that. And then you get on the stream and you see me doing it. It's difficult to handle. If you're going to learn to play tennis, the first thing you got to do is always do a certain thing by the book. You got to learn how to hold the racket correctly. And then later on, you can do some things differently.
exactly.
You can apply some advanced tactics, but not at the beginning. A lot of people want to treat trading as you learn these like secrets and you learn these truths and like that's all there is to it. You just go then do that and with your laptop with your pina colada. But in reality, it's very, very different at the beginning than it is down the road. And you need to kind of embrace that it's gonna change. Boof, I am a Federer guy through and through. Respect the other two, but Federer was my man.
Hey, I don't want to take away from, guys, what Merritt said is really important. You have to learn the basics and you have to follow structure first. Eventually you learn the rules and you learn how to break them, but that takes years of experience. And, what you think you may be doing that's similar to what somebody like Merritt is doing is not going to be the same. On your case, that's most likely going to be over trading if you have not put in years of consistently gains and extracting money from the market, right? And you may not you may not be at a point where you know that difference.
Yeah, and guys, this doesn't come from a place of like me and Chris are superior and you know we can do things that you
Yeah.
can't. That's not what we're saying here. What we're saying here is like genuinely for you to develop and start to taste consistency, you've got to do the simple well. You've got to get really good at doing the basics. You've got to repeat those things consistently with a process behind it, like using checklists, doing things that are allow you to be consistent in your behaviors. And then from there, you can expand. From there, you can get advanced. But don't rush that. Don't rush that.
Yeah. It's big. You can't rush it. A lot of people are rushing to get payouts, and that leads to not the right decisions, the right in trading, and you're biased and you're so close to a payout and you blow it. Why do so many people blow it?
Because
So close to a payout.
they're focusing on goalposts rather than the things that they have control over. That's why.
Yeah. Black box supremacy.
Okay, we've seen a bit of a shift on the tape here, Chris. We've seen some sellers really start to press this thing. We're still got to get through that '06 area, I think. But if we start to hold below '06 in the S&P, that's got to be really good for your NQ short.
Hey, talk dirty to me.
Yeah, Stowe and I talked about this a little bit last week. Redefining what it means to win, guys. It's a toxic thing for a trader to show up every day and when you're done trading, you feel good about yourself and about your work and about your day if you're green, and you feel bad about yourself and your work and your day if you're red. That is no way to live. You have to be able to learn to rise above that. You have to redefine what it means to win the day, to win the session. And the thing to do is to focus on the things that you can control. Be aware through your prep, your journal, your review daily cycle of doing the work. Be aware of what it is that you're working on, what it is that you want to show up today and win at, something that's within your control. We call that setting a daily process goal, and that's how we handle all our traders on our desk. You got to have a daily process goal. You got to have something that you're working towards, and that needs to then show up in your review. How did you do today at your process goal? Let's make that the priority rather than a focus on the P&L. And if you do those things, if you put your head down and you go to work day after day, week after week, you're probably going to look up and your P&L is going to be better than it ever has been. And if you're on my desk, we're going to be having those conversations about increasing your risk, increasing your size. Yeah, that's what it's all about.
Yep. But notice that it comes at a later point.
Yes.
A lot of people would try to increase their size after a few wins, and
yeah,
does not work out.
Yeah.
All right, so here on the 2-minute, we're now getting that structure here, that wedge structure that I wanted to see to show acceptance per my rules. So at this point, I'm a little bit more convinced that we are gonna push out higher. We're sort of coming into that mature consolidation for my structure that I follow here. So yeah, I'm gonna close it here.
Yeah, strong buying right off that S&P 06 retest.
We formed a wedge here for both. Both are breaking out higher now. If we can get a little bit of a pullback, I'll see if I can engage.
C period is here. The third 30-minute period of the day.
Let's see, this is now 6:50 to 40 minutes of just sideways. Still struggling here at that 64.18.20 in ES, NQ 270s, 280s. Let's see if this is that push attempt to get that second leg up. Or it can just end up being a choppy morning for the rest of our session. All right,
Yeah,
we
at
have
the end of the day, another way of looking at this is at least in the S&P, we have reverted to VWAP, and we have been above, below, above, below, above, below, and now above VWAP, right? It's chopping around VWAP, which is never for me, never an ideal intraday trade location. Hey, if you've got an A+ contextual trade location, then sometimes I'll allow myself to trade from VWAP. That's fine. But if it's more of scalpy intraday stuff, then VWAP is my least favorite place to trade from, actually. But very methodical here today relative to the market profile structure. Reject the lower edge, break back out, reject the upper edge. So looking higher.
We do have a 2-minute 9 MA high low here as it attempts to break this sort of consolidation for those who follow my Thursday slot. So if we can create the higher high, higher low, then we can continue and get that breakout higher. If this recent 9 MA higher low fails, then I'll just move my stop under there and I'll have probably half our risk in the trade now. All right, so I moved my step up, my stop up.
Step up.
Only because we're confirming that 2-minute higher low. So once that's there, due to the structure that we're in, the environment, I'm gonna move it and see if we now get that higher high, higher low trend structure away from this wedge or breakout, which you guys have seen me share so many times.
Oh, Zach, I think if you email, I forget, maybe the Ninja crew can help out in the chat there, but there's an email address they have where you can request the chart template. But just so you know, I run VWAP from the session reset point, right? Don't run it from midnight. Run it from when the CME reopen starts. So Edgy, trying to deal with that too. Steenbarger says greed comes from need. Not an easy task to deal with. So I had the privilege of working, Steenbarger would come in my office in New York and sit down and talk to me about my trading.
Yeah, what an experience, huh?
Oh, he is a gem of a human being, and that doesn't even speak to his prowess as someone who can help traders and whatnot, with psychology and things like that. So I had the privilege and the honor of doing that, and I can tell you that the whole greed comes from need thing comes back to the belief systems and this concept that I talk about of motivations for trading. If you need to have this trade be a winner, then absolutely you are wrecked before you even begin, right? If you need, like I was talking about earlier, if your view of winning is to be green for the session, you are screwed before you begin. Because what was the quote? Greed comes from need. So your needs that your mind, your biology are demanding, right? You want to win, you want to be successful, so you have certain needs tied to those goals. You've got to move the goalposts. You've got to redefine what it means for yourself in a real way each day so that your needs are now different. Be greedy about winning the day when winning the day comes from the right place. This is eye-opening stuff. Greed, as Tendler talks about in his books, is not bad, right? You're self-serving. You're looking to do things well to make yourself successful and to win and to be positive, right? We're not trying to self-sabotage out there. I think a lot of traders who even talk about self-sabotage are missing the point. You don't just want to hurt yourself in a general sense. So anyways, it's a lot there to digest, I know, but it's really, really important to move those goalposts for what you're trying to do, what you're trying to win at. And if you can do that, then the motivations, the greed, the desires to do things can come from a different place to do more positive things in your trading rather than trying to get that P&L number green or positive.
It's like sideways.
Mm-hmm. The overnight session was much more interesting than the pit session, huh?
All right, I took a stop on that idea, and now it's time to wait. We're not going to really get that directional move unless we finally break down, but so far it's just sideways.
Yeah.
So I took 2.5 R stops, so that is just sort of -1 R for me, which is manageable. and you guys saw me sort of manage that and change it with the structure. But we're still stuck here. It's 64.18.20 is an ES, could not get going. NQ 280s, that was sort of like the first target on a move higher, and neither short nor long at the moment are working.
Chop around VWAP. It's a stay away. I've been, watching a trader on the desk here. They've given back their entire day during this sequence. They were up, quite a bit. Call it 3 or 4 R for the session, and they've given back their entire day during this sideways chop fest around VWAP. So we'll be talking about that after the close.
What can you tell the traders here? Because I do encounter those that are, yeah, I have found that they're aggressive, and so in a directional market they do really well, and then they don't know how to adjust their aggressiveness, and when we enter this choppy period, they'll lose 80% of what they made.
Yeah, and trust me, guys, I can't I can't come on here and say that I've never done it, right? But it's absolutely, it reminds me of something I learned during my days at SMB from Mike Bellafiore when we would sit down in the mornings for our morning meetings, our mid-morning meetings after trading the open. And he would talk about how he would get angry at us if we went DLL for not a good reason. I think that's an interesting concept. It's one thing to go daily loss limit when you have ideal trade locations, you have great order flow, you just all systems are firing, right? And if it's in stocks, right, you've got the great news catalyst, you're aligned with it, blah blah blah. And then there's a market like this where Delta has gone sideways. We're chopping above and below VWAP. So if, for example, if you're trading NADRO, your ideal intraday trade locations come from the edges, from kind of those plus or minus one extremes rather than from middle chop. So when you give back a big chunk of P&L in a very subpar way from a chop fest sideways, like not great looking market, that's a negative thing. When you give back P&L punching into really good opportunities from clean price action, from great DVA locations, from great contextual locations, then it's worth it. The risk was worth it, and the ultimate losses are worth it. So I think to wrap this up, I think everyone needs to know at home or on my desk, what do those places look like for you, right? What are those sequences where you tend to get caught up and tend to be a little overactive, and it's just not worth the additional risk? And defining that for yourself is a big deal. And so for me, it's middle of DVA, right? You guys know the phrase. I talk about it with Crudele or on the stream all the time. My edge comes from the edges, and I apply that concept to multiple time frames to come up with trade ideas. So don't diddle in the middle is the big thing for me. Like even this down move here, Chris, it does. Oh, thanks, guys. Even this down move here doesn't have much delta behind it. If we look at this down rotation, really nice little down rotation, nice clean movement, not a lot of selling behind it. This order flow has been flat for 45 minutes. Don't enter in the center. I'm gonna leave that one.
I think we're now seeing that rotation lower.
Gold. Gold making a nearly parabolic run at the highs for the year. Back adjusted on for me, those are like call it 3,600. It's just shy of 3,600.
Yeah, I see this as we're leaving that area that we were in, rejecting back down. That original move lower may be happening here that I was looking for.
Yeah, unofficial call from me here. The sellers have it again. Unofficially. It's too quick to call, remember? So we are now accepted above 6406. So this is still acceptance above 6406, even though we're technically below it. It just looks to me like the buyers, a case of what didn't happen. The buyers rejected this lower structure. They found some buyers from the edge of it, and they fizzled out. No continuation on the tape, no aggressive buying. And then now we're starting to flirt with failing again back into this area. So to me, I'm looking more at now 63.82, low of days back on the table. Unofficially, of course.
I agree with that.
What would the opportunity look like? Well, let's just run the mirror image of what I talked about on the upside. We're going to need to hold some kind of rotation into here, maybe pull back, and then look for something to press towards these lows. And this time, I don't think we're just going to stop at the lower edge of structure to the tick. You know, we're at least going to run those stops and then see what happens if perhaps we can hold and continue to press. I'm not sure if this got posted in the chat, but our crew on the back end of things here let me know that you can request our chart books by emailing learn@ninjatrader.com. September.
Yeah, that looks like that original short was it.
Yeah. Yeah. That's always the risk of getting a little cute with some advanced tactics, is that it pulls
Yeah.
you out of the simple, and sometimes that simple is the one. Still not good selling on the tape, though, I'll tell you that. Let me check on NQ. Better selling from NQ. By the way, who was that we were having that conversation with about the monthly? I wonder if I think it was AQ was the handle. There he is. He or she. Um, what do you see now? You think it's do you see it as a breakout pullback of monthly prior value from that level now, or still unchanged rotational within that? Sometimes people are able to see it a little easier once we get a wick and a rejection versus when it's happening at the hard right edge, which, by the way, is a big deal. I once wrote a blog post. I think it's still out there. In fact, I'm going to do a little Googling. Yeah, so if you Google Merritt Black close the gap, an article I wrote for S&B on their blog, September of 2016. Could be something some of you find useful. The gap. The gap between what you see as a great opportunity at the end of the day in hindsight and what you were able to see at the hard right edge in real time. The more we can close that gap, the better traders will be. And I highlight a few things that you can work on and approach there.
All right, we're coming to some support here. 60 back to that 6390s area in ES where we danced around in the morning and then bounced. Same with that 130 area in NQ. So if we are to sort of maybe say create a higher low versus that morning fell breakdown low, this would be it. If not, then if we can't hold here, then we make new lows. Quantum, I was just a little bit aggressive on the upside. We were seeing a strong reversal from that failed breakdown, and so my aggressive side came out a little bit, and you know, based on the acceptance, the consolidation that we had, there was a good chance that we could push up higher and to test that real main resistance area at 330s. We're not seeing that, so now maybe we get new lows.
That was what I had the inkling for a little bit ago there. Order flow not very supportive of it. So this is honestly, if you look at the oh, we're not sharing my screen anymore as I'm about to sign off here, but as the S&P has continued to make these lows recently, let's say from 6405 down to kind of 6390s, that's been on positive delta. So there is a passive seller now actively dominating, driving this move lower. Well, Chris, a quiet session for us, but I feel like we had some really, really good conversations.
I
I
agree.
feel like we put on some risk in some really good spots, but we have kind of had ourselves a little chop fest here. The thing I think to take home for people at home is neither one of us has really lost much money during this sequence. We've really
Yeah.
kept our wits about us and looked for better opportunities to, to really pounce and to, again, go DLL for a good reason, right? Don't go DLL for a bad reason, and define for you what that means.
Yep. Great sesh. Do you trade afternoons as well? Or it's just, do you have like a morning slot where you're like, okay, that's my trading window, and then you call it a day?
It's a hybrid. So my morning hours are dedicated to my trading. I will help desk traders. I will do stuff like that as needed. But my morning hours is always kind of like a sacred thing. Like if I'm going to play golf, it's not during the morning, like anything,
Yeah.
work or play. Those are my trading hours. And then as I can, I will lock in and focus and trade throughout the rest of the day. Yo, Stowe's here.
Yay. Good morning. Good morning.
Morning,
Still
dude.
master.
How you guys doing?
The Meister.
How are you?
Oh, pretty shitty, Chris. Thanks for asking.
Oh God.
I made a bunch of mistakes trying to stay on this trend in a really aggressive way today and gave back a bunch of points. So not super stoked with myself. Yeah, now it's gonna do.
Is this the trade you're talking about, Merritt?
What's that?
Hey, I didn't say any names.
You're in his Apteros thing, right?
Yep, indeed.
Oh, Stowe's on
What?
the desk for sure. Yeah.
Yep. Yeah, I was up about 20 points and now I'm down 18. So not great. Not good to round trip the whole thing and then go negative. So yep. So yeah, now I'm just kind of paused. I'm looking at the same idea here. Yeah.
Hey, we all make trading mistakes. We all, myself included, go look at some historical streams of mine. A little overactive in an area where I shouldn't have been, where I should have like let off the gas. This is the crux of pro trading, of grinding day in and day out. We're not always like Jared Tendler. I love his A game, B game, C game type thing. We're not always going to have our A game. We're going to make mistakes. The only thing that matters is shifting to that point where the next shot is more important than the last mistake. Being able to reset, being able to let go of the past outside of any risk constraints you might be dealing with and press forward. That's what matters. And I know I've seen Stowe. He's capable of making that mental shift and of putting one foot in front of the next to make some good trade decisions. So
Yeah, for sure. Thanks, dude. Yeah. Yep. Just got caught. Just got caught too excited about the trend. Looking for the gap fill, started to get stoked, and we cleared a bunch of stuff that I was looking at. We cleared this 402 spot. This is the bottom of the previous balance. So I tried this again. This low was really good. Yeah. So now I'm kind of hands off until these 92 spots. Now the whole day has shifted context. NQ and ES are at least doing the same thing. It's not what I want either of them to do, but at least they're synced up. So yeah, I'm just gonna try to be patient and think about what I can do to attack this in a smart way. Yeah, but definitely giving myself a moment because I'm annoyed that I gave those points back. As it's an emotional thing. It sucks to lose money and to make bad trades, especially when you started out making good ones. So I'm just as privy to getting grouchy about that as anybody.
one thing that I do want to talk to you about at some point is a what's called a give back rule.
Yeah.
Where
I've had them before.
Yeah, so like, and just for those of you at home, a threshold for, okay, if you're up X dollars or X units of R, right? If you cross that threshold on a positive side, setting essentially a new DLL, right? So if you're up 4R on the day or 5R on the day, and that's past your threshold, boom, the give back rule is put into effect, and you stop out at plus 1R for the day if you get back there, right? So a way to, and I need this more than anybody. Guys, days where I have blown up, and I have done this horribly, and I mean horribly, guys. We're talking 6-figure days, okay? Have been, I literally am at my best P&L ever for the session, and allow that to turn into massive losing day. Okay. Not something I'm proud of, but it's something I've done in the past. And another reason to be in a prop environment where people put more controls on you and don't allow you to do things like that, right? Don't allow you to not follow prudent risk type stuff. So I just want to say I've been there, and for me, having a good give back rule is an absolute necessity for me, because once I get attached to that really, really nice day, boy, do I want to change those goalposts of what it means to win.
Yep.
And if I start losing sight of that, I want to do scratch and claw and fight and do everything I can to get back to it. So very, very important.
Yeah, I think a lot of what I'm dealing with today is I've been waiting for my good day type for a while, and today looked like it was my good day type. And so, because I've been waiting for, the all of last week was not my A game, all of at least all the last 2 weeks, really. And so we got a hint of one today, and my psychology was just like, this is it. That's your day. And yeah, just put the blinders on in a lot of ways. So
The thing I'll really love to look at with when I look at your review today and things like that after the session is, I assume you potentially had it nailed from the low. That could be wrong. And then got overly active when it was chopping around later. So I'll be curious to see how that dynamic, if you were
yep.
in it from a good spot and then kind of messed it up, or if you weren't, because that'll be a big difference maker.
I was long from 63.88 to 64.10. And
yeah,
then
I'd say that. Yeah, that's pretty decent.
Yep. And we got, a crazy push off of 64.10. And so I was just looking to add into those spots and took, 4 stops and gave it all back plus 18 points. So, yep, that's.
Well,
But yeah.
guys, I'm overstaying my welcome here, but
Me
this
too.
stuff matters. This is important stuff, and I love Stowe. And look, dude, there's no embarrassment. There's no shame. There's none of that, dude. You are fantastic. You are putting in the real work. I love you, brother, and
Oh, thanks,
let's
man.
keep getting after it, man.
Yep.
Chris, really enjoyed the session with you today, brother.
Yeah, Merritt. See you next time, right? Enjoy
Yeah.
the rest of your stream, Musto.
See you,
Oh,
chat.
thanks, brother.
All right, you guys take care.
Chat, good morning. Good morning. Good morning. Oh, whoops. It needs to see the ugly chart, so it'll hide my taskbar. Sorry, we need to look at this anyway. Did not get back into balance there, huh? Didn't do it. Wanted to. False break back in. Rough. Rough. Yep. Hoodwink today, everybody. Totally. Some days you pull your own rug. I mean, grand scheme of things, it's not a, it's not a loss that is going to eat me up monetarily, but mentally it sucks. I think it sucks more mentally to give back a really good trade. I don't know why. I don't know why that is. when you have a really good trade and your ads suck, it really takes you out of your process a little bit. So, hey, what's up, Mike? Hey, Happy Crab. A Prius is good. I think. I mean, I haven't driven it in weeks. But morning, Kevin. Stowmeister. Thank you. Good morning, Mr. Deck. Good morning, Emilio. And you guys are cheering me up. Let's see what the chat's doing. Morning, Lido. Everybody here. Don't be sorry, Shravan. It's something to be sorry about. People lose all the time, man. It's part of it. It's part of getting better. It's part of this whole process is like working through mistakes like this. Some of them are dumb. Some of them are, just normal. It's fine. Hey, good morning. Arm Gabar. Yeah, you can write that down. Me and XY are making a calendar of sayings, and someday you pull your own rug, and yeah, I'll put that on the calendar. On a normal day, I'm still trying to be long in here. We'll switch to NQ. I haven't taken any NQ trades today. There was plenty of volatility in ES, so that's where I was. But of course, watching them both. We're kind of back in this dumb spot where all these lows where we lifted off from. Let's see. Oops, I lost my chat. There we go. Still pressing. So this was a lot. I mean, we can look at the Delta profile. Such a mess up here. I thought we had it here, but 6420 took its sweet time. What's up, Dean? Good morning. Yeah, you're right, Logan. A give back rule is good. I need to make a lot of decisions with sizing with that Apteros account anyway. I'm kind of struggling with the size, and I always, honestly, every time that I get from a evaluation environment to a so I'm going to get in this trade here. Anytime I get from an evaluation environment to like a real life thing, it's a pretty common thing for me to struggle. I think that's normal. So we got a big LVN to lean off down here. This is true trend day potential. This is the A+ spot, which, I mean, honestly, I need to be waiting for. Let's see, what time is it? 11:08. Okay. We didn't quite get to the OR mid. NQ is turning up a little bit. But again, this is kind of last stand spot here. This was a lot of buying up here that did not get rewarded. Passive seller just ate it up. Yesterday's wine. And we are back below And that's the other thing I got to remember too. We're back below the balance area lows where we left previously until we're above 402. And I think it's like 23,200. I'm going to need to see somebody get at least kind of busy up here. Let's see, 1110. 560. Not loving it. And NQ is still very heavy. That's discouraging me. I'm pretty happy bit off that 95 though. How far do we get into this node? So we really just clipped we just got off of it. So we're trying to hide in this node here. ES tends to be a little more generous with its nodes. I don't know if anybody's ever noticed that. All right, we got one off there at the open. So I'm going to watch for response here at the RTH open because this is obviously, you know, all of this selling, this passive seller rewarded. I need the bid to continue to step in here. So I'm going to put my little guy here. Oh, all right. Well, maybe I don't have maybe I don't have that on this chart. Maybe that's the problem. I'm trying to put an anchored VWAP there, but it's just going to draw a diamond instead. Not loving that rejection. I mean, I can't think of anybody who loves rejection. Except for sellers. Just watching this here. I think that let's see. Offer's still really heavy. Yeah, I need him to pull. It's jumpy right here. The bid's not really getting very far. That's what I'm trying to see. If this passive seller is right here at 93, holding it down. Need to get up and through that blue team. Nope, I hate it. We'll get back out of there. Try again if we have to. But not a great spot. NQ wasn't down to its -1 yet, so now that it's come down here, we'll see its reaction, but it's still very heavy. Ugh, gross. This is the most Monday, Tuesday of all time. Let me tell you that. Not loving it, but we'll let it put a low in. We can get in if we still feel like there is upside here, but yep, always another day. Oh, thanks. Check out the red button that says sell. There was a lot of opportunity to sell this morning, for sure. Yeah, Zelino, it's definitely a different animal. Not only moving from evaluation to real money, it's not like, I don't know. The thing I talked to Merritt about last Tuesday, I think, is it's a lot of like there's no goal. So like, I don't know. It's just on me to just trade well now. There's no real goal. And one of the hard parts of, doing this for so long in the valuation world is I get really used to the goal. It's just part of how I'm wired. I need a goal. I need stuff to check off the list, and I'm not as good at making goals for myself as I am having external goals to follow. So it's just, it's just something I'm not great at. Yeah, I know, throne chop. Yep, for sure. All right, here we are at overnight low. NQ is testing its 30-second opening range, and also its RTH open. JD asks, I always hear some of you guys say a lower high is good or bad. What makes them good or bad? So the language there is probably not the best. No low is good, no low is bad. We're just looking for like some sort of exhaustion at one of those lows or highs to indicate that, that low is done. So like, you can look at it as, I like to look at it in a volume way a lot. So this is a good example here. And now you can leave, so there's a couple different things. XY talked about this too. You can leave volume behind as a volume node that makes a good low, or you can leave volume behind as a taper, which is just like a very thin volume profile that splashes down and then back up again. Just to show like quick rejection, which either means that, selling stopped and then buyers stepped in, or selling stopped and then sellers began to cover. because either way, like the market orders are the same. So when you're buying to open or buying to close, those hit the tape in the same way. There's no way to know which is which, but yeah. Now down here, I would say that this area was a node that was left behind, and then on retest, 23,050 held. More so than that, this overnight low that was quickly reclaimed and then very progressive up from that. So we did have an opening drive down, which means the likelihood of closing the gap is slimmer. But yeah, that's just yet another thing I should have kept in my mind as we were floating higher. Hey, Trader Nautilus, good morning. Dario, the 30-second opening range is just a very common pivot point that's used by, a lot of floor traders back in the day. It's just a good way to gauge aggression off of the open, especially on a retest. So like today, this is the RTH Open, right? We're at it right now. So what happened off the RTH Open in the morning? So you're kind of telling a story to yourself or at least I am, when the market opens. So initial opening drive down. Once we got back to that opening print. It rejected, but then immediately gave up and has not been retested yet. None of this stuff really has been retested. None of this. So there's still or mid trade is still very much open. All those spots, but ES is now grinding down below its overnight low. Much weaker than NQ. Let's see if it can break its IB low at 683. I'll flip back to ES for you too. Is this cool having both charts? You guys like this? Oh, sure, Zelina, no problem. Thanks for the question, bud. Jose, the MGI study is just an order flow lab study. So I'm not sure. That's just part of the code that they use to make that stuff happen. So now we're kind of down in this node. So this would be the node I want to leave behind down here in ES. Get out of this thing. So much passive selling in NQ right here. Good Lord. Got 5 minutes to the London close. Michael, I don't know if I'm going by Stowmeister. I don't know. I don't know if that's in the cards for me. Cool, friend Tintin. Awesome. All right, cool. Well, good. I'm glad you guys are stoked that I'm spending some time with ES today. I'm not. Not yet. All right. So we've got our red team, blue team on the way down. Now we're watching this. This is such a wild day just to look at from a trend point of view, Opening drive down, major trend up, which held quite a bit. I would consider all these holds, and then just this ledge here at 64.20 would not refuse to give. And then if you look at I was making my view up videos, and this is actually a good day to go over. There's often like 4 days inside of a day. This is the worst day to trade for me and the way that I trade. Once we lost this +1, not really a single soul home here at VWAP itself. And then down here, that we only got 1 of 3 lots off for profit there. So now the context has shifted completely, where we were almost vertical in, the first 30 minutes. Now the slope is gradual down. I wouldn't call it like a full 45-degree angle, but this thing's going to need to balance itself out before it can get back in. And then this volume profile too, this is a lot of volume that we left up here. And all of this buying, all of this blue team right here, this was all an attempt to get out of this and back into this volume, and it rejected, it gave up. So not encouraging for a bid right here. Oh, Nolan, you look at the quarterly view, Bob? Okay, that's fair. Def Jesus. That's a good name, bud. Yeah. It's so that's a thing, yeah, of the Avi 8BZ. I'll speak to that too. So you don't want to tilt yourself like that. That's a really quick way to get into tilt. And that a lot of that happened to me today. And I noticed it, so I was able to let off the gas. But you have to be able to be comfortable taking the stop. And a lot of ways to not be comfortable with taking the stop is when you see your stop get run and then it immediately reverses, especially in a quick tape like today. Today's been quite fast. Let's see if we can get out of this now. Get out of this 91, or if we're stuck down here. This has been a pretty quick tape. So if you're using a 3-4 point stop in ES, it's going to get snagged. And then you're going to be right back into where you would have been in profit. So, and that's no fun. Nobody likes that, but you can't, you have to be a goldfish with that memory, and you just got to let it go and try to reposition if your idea is still valid, or at least figure out a new way to validate it. I mean, this isn't a balanced day for me, so I can't initiate down here. I'm not going to, as much as I would love to. The shitty trader inside of me is trying to make a ton of mistakes right now, is the best way I can explain what it's like to be in drawdown. And it's hard. It's not only hard, being on somebody's desk doesn't make it easier, by the way. There's a lot of added responsibility with that goes into this. So it's not like a magic bullet. You get to a desk, or you pass an evaluation, or you prove something, and then all of a sudden it's awesome. In a lot of ways, it's a lot harder. So the shitty trader in me wants to do all kinds of horrible things. Like, I want to prove that I can come back from this loss. I want to prove that, I was right about my original thesis and we are going to fill the gap. I want to do this. I want to do this. I want to do this. And the thing about the market is it could give a shit what I want to do. It does not care about me. It doesn't know I exist at all. I'm just a dude. I'm just a dude. That's it. The market is a mechanism that cares about much bigger problems than any problem that I have in the day. So I want to buy this. I want to be right. I want to be right. But you can't just do that. You can't just be right. And it's like, yeah, on drawdown days, um, not even drawdown days, on days when, you had a good trade and then you screwed it up. Um, I tend to be a little harder on myself for that stuff, but that's when the tilt, like, this is what, who asked me about tilt last week? This is tilt. This is tilt right now. When the bad trader inside of you wants to make bad decisions, on your behalf to make money back. That's tilt. This is tilt. Well, don't make those mistakes, Sean. You don't have to. You can recognize them. It's not fun. Like, I don't want to talk to you guys about this at all. I would much rather have showed up on stream and been like, yeah, I took 2 trades and, I'm up 5R right now and I'm having a great morning. How are you? But that's not what I ended up with today. That's not how it was drawn up for me. So we abide. Mike, Stowe, do you know what would be encouraging? Hey, man, if you need a new low, that's cool. You can have one. I'm sure a bunch of people are short. I did catch the long on the open. That's the problem. You, man, some of you guys have these names that are impossible to talk to. It did, yeah. So that's what happened, and then I pressed into it, and I was not willing to take no for an answer that the trend was over. Simple as that. That was quite a big lift there. Let's go switch back to NQ. Somebody just lifted a bajillion lots right here. Some sort of business going in. Something going on. Norseman, we get it. You're short. We get it. Let's see what happens with this guy. This is a pretty busy moment down there. Thanks, Don. I try, man. It's nothing. I mean, I don't know how to be something that I'm not, unfortunately. This is not a gift I was given. I wish I had it some days, for sure. I wish I was able to live without my heart on my sleeve all the time. It's annoying to a lot of people. I'm good, JP. I also don't want to short the hole on top of everything. So, and like, I don't really have a short. I don't know. This is why like short continuation trades off of like a giant gap down like that. It was very hard for me to get on. There's just no. I mean, let's go back. Unless we get all the way back to the 30-second opening rate. Yeah. Unless we get all the way back, like Damn it, my thing's gone. Where's the London OR at? Wow, it's all the way up there, previous day low. Wow. Yeah, so 440. This is where the gap closes. This is also where London opened, and it's just been all selling since. Just drift. We got back to this chunk. I don't know. Yeah, I just don't have those. I don't have that short continuation trade in my on a big gap down day. I don't have that in my playbook. It just doesn't exist. Don't even know my name. All right. NQ's at its 30-second opening range, or its 5-minute OR. That's one thing I wish existed, is that when you take when you switch charts, I will take this chart to get this scalp. When you switch charts, your like your ATM for either one is on. So like, obviously I need a different one for ES and NQ. ES at its previous month value area low here as well. Not looking great. Certainly some buyers. Overnight low gonna hold? That would be funny. Yeah. Yeah, it's worth a scalp. But again, we got to remember what's going on. All right, we got one off. That's good. We got to remember context of the day is clearly shifted. We are now, well inside the lower standard deviation band. This passive seller here was definitely rewarded. Exhaustive low that may have been there when the overnight low held. It's just got to try to keep it in mind and watch the flow. See, we get back up to this 92 guy. Still very heavy tape. So we got 77 to 79, 80, 81. I'll test it again. Tape kind of turning up here, but Mm. Nope. So ES broke its overnight low, broke its IB low. It's kind of building this like. So we got this exhaustive low down here. I need to leave this behind if we're going to make any progress. But you see we have blue team following it down at the moment. All this buying getting nowhere currently. Mm-hmm. Yeah, just smashed. I mean, there's a lot of bid right here, but you see what's happening to it? This guy. This guy has something to prove. That's for sure. I feel like they're going to push this thing off a cliff like at any moment. It really does feel like this. This is, I mean, this is like, this is a low that should maybe be shorted. This is a hole. This is a hole worth digging right here. And Q tape very heavy too. We'll see. And Q's still fighting down here with its overnight low. But so heavy. This is the spot. This passive seller. I mean, my previous month value area low. They're going to keep pushing past this? Possible. Trying to watch still. It's not going fast enough. some of these spots, like you really want to see an immediate reaction, and it's just a slow grind down. NQ is lost its overnight low now as well. All these little pops just getting eaten up by this seller. Very curious. Very curious right here. What time is it? 11:45. Yeah, somebody's going to have to give it up. And it's like, I don't know who it's going to be. Double fight here. So ES fighting previous month value area low. NQ fighting with its overnight low. Very, very wild inflection point. So we'll see. If this bid from the morning is going to turn around right here, this is going to be where it does it. But I mean, ES still like off a cliff compared to where it was, though. I don't know. I don't know what's going to happen. Probably nothing. It should have happened by now if it was going to happen. There's not a lot of passive buying down here. It's like only active, which is weird. So it's not red team, blue team. It's just blue team. Let's see. What's up, Centro? Yeah, the bands have been view up. The serve view up. The bands have been very very slanting. Sorry, I'm trying to fix my screen over here. I lost the chat for a second. Got too much stuff on my screen today. That might also be part of my problem. I might have been trying to do too much at once. I need to try to find the balance with that a little better, to be honest. Might need another screen. I don't know. Can more screens solve everything? Possibly. This is going to have to make at least like a splash low. Let's see. So much selling absorbed now. There was a pretty big red team there. Let's see if those sellers get rewarded. It's 77.50. 23.50 finally filled, so five. Sellers won that round for now. Yeah, we all want vol till it slaps us in the face. That's well said, for sure. Well, yeah, I don't know if that's what I don't CJ, I don't know if that's what PAX means by what happens above the opening range, normally same to the downside in the same day. I don't think that's what he's talking about. I just think he means like it can go up just as much as it can go down. I mean, if that happened in NQ today, we would have like another 250 points to the downside, which would be like an extremely weird day type. That would break a ton of statistical stuff. Not to say that that can't happen, but hey Chris, hey brother, how are you? Oh, you picked a hell of a day to tune in. I'm getting killed today. Yeah, Jeff, not sure. Not sure where the VIX is at, brother. Yeah, Mr. Deck, we're definitely not headed to zero, but I mean, look at this is gnarly. When you see this at an extreme, this was a ton of buying that got nowhere. Zero. Zilch. Oh. Oh, nice. Thanks. I did not. Thank you. Thank you, production team. They reminded me that I have to close this out. Which is sad. I was looking forward to seeing Jim. That was my that's how I plan to cheer myself up at the end of this at the end of this thing. But it's okay. I'll see him this afternoon. I'll be back with XY later to trade the close. I'll ask him about how he did this morning, and then I'll probably make him listen to thoughts about my feelings for a while. Yeah, Ram. As far as Pax's and Q and ES handle stuff, he uses like Fibonacci math, I think. I don't know, but I'm pretty sure. And that's very close to what 15's a lot for ES for me. I have like 11 to 10 as my normal expectation for ES. But 65 is pretty close to average for what I look at for NQ. So I don't know. If it works, it works. I have no idea where it's derived from. I think he has mentioned that it's fib stuff though. Hey, Harry Potter. Are you the real Harry Potter? Yeah, reverso. That's fair. I think at the end, yeah. I think at the end of this day. Hey, no problem, Jose. I mean, dude, I'm on the show all the time. I can't have all green days. That would be a lie. So, and I'm not really capable of lying to that degree. I don't think so. I'm much better at lying to myself, but even I can't do that on a day like today. Firmament, I don't think that's Jim. But yeah, I appreciate you, Jose. I appreciate you saying that. There's a lot. I mean, there's a lot to learn about your own process when you're having a bad day. Yeah, what did you do wrong? What do you feel like doing now? All those things. What are you still looking for? What's the next good trade? Is there a next good trade? The other thing that's hard is when on these days that reverse against themselves so much, it's really hard to not rabbit hunt all of this stuff that you didn't see. So, I mean, at least for me, it's super hard for me not to go back through and be extra critical of stuff that I should have seen in hindsight. So I'm going to try not to do that too hard today. Like Merritt said, I have to do a review. That's all part of the Apteros thing. I'm still getting used to writing good reviews for that thing. But I don't want to be too hard on myself other than, I probably should have had a give back rule in place. But I also try to, shower it off. I try to get out of the negative as quickly as I can and on to the next. Yeah, I try to give it a little more context in that serve you up because there is always like a process lesson in there that you should learn, especially on days where you were red. Well, there's a difference, right? So like today is a red day and that's fine. I've had red days. Red days are fine. Healthy. It's just like the market. Like it's healthy to have a pullback every now and again. But red days where you feel like emotionally tilted, that's a different thing. So I think that involves more introspection when that sort of thing's happening. So I'll try to get into that. Yeah, Larry. Yeah. So what Pax is talking about doing is like I think it's one of his students on Twitter explained it actually pretty well that I was able to understand. So you just use micros to scale in and out of mini positions, but they're doing like from what I've gathered, and you'll have to ask Pax, but this is my interpretation of it. What they're doing is they are using short-term market price action, day types, things like that to get into longer-term trades. I know that at least Pax is doing that. So like he's not trying to take a runner. He's not trying to take a base hit for a lot of what he's up to. He's trying to hit, larger macro plays. And he has like, maybe not macro plays, just like more high time frame levels. And I think he's operating off of those a lot for his ultimate targets. And he talks about that on Friday's show with Jim too. So, hey, Mr. Dexy, brother, I appreciate you. Yep, that's right, Reverso. There's always another day. That's why it's important to survive, Like I have a DLL, I have lots of things in place to make sure I'm cool. Yes. Yeah. Yes, Chris. Years of poker training. I mean, it's so easy to get mad at variance. It's so easy to get mad at process mistakes and just try to I think the nature of tilt, and this will be the last thing I say before we take off. Yeah, Kenshin, also, before I talk about that, yeah, you can't do that in a prop firm, what Pax is doing, because they would consider it hedging. But in reality, it's just a different way to trade. I think that tilt at its heart is the idea that you can remove an uncomfortable feeling by erasing a bad thing that just happened. So right now, I would like to remove the uncomfortable feelings that I have, which are I lost money today. I traded outside of my process. Well, I mean, not really, but I should have taken less shots at adding and aggressively adding at the top. I'll review those fills and see where I'm at. But and third, I have to talk to Merritt about that. That's an uncomfortable conversation that's not fun to have. So Tilt wants me to try to make back and erase all of those things that happened so that I don't have to have that uncomfortable conversation. I don't have to take the L. I don't have to do all of those things. So that's why Tilt is your enemy in this part, because if you just listen to Tilt all the time, then you're never going to get better, and you're never going to be able to recognize yourself in the moment when you are tilting and when you are trading emotionally and doing stuff like that. So I don't know. That's my rant about that. Yeah, but thanks for watching. Chris and Merritt did great. That was awesome. We had a great show today. I will be back with XYZ this afternoon. Probably still in my feelings a little bit. We'll see. But yeah, I appreciate you all. Cool. I think that's it. Should I do the sign off? No, probably not. All right, chat. We'll see you in this afternoon.